How are you doing this afternoon? Doing good? All right, welcome to the conference. I'd like to give you a little background as to why we're here, all right? So, as you all know, crypto assets were basically developed with the idea to decentralize the financial services. Now, the digital phenomenon revolutionized the payment sector as we know it, and so much so that by 2021 November, crypto assets valuation was about 3 trillion US dollars. However, similar to the way it rose, by July 2022, it dropped to less than 1 trillion US dollars. So the relatively quite a volatile industry. And experts basically pointed different fingers as to what might have caused it, key amongst them being the regulations sector, or rather the lack of regulations, and that is why we're here today. We're talking about MiCA, the Markets in Crypto Assets Regulations, and it's one of the first attempts at regulating the industry. And today's conference, as you can see, MiCA entering into force. We're going to have 4 different presentations, and then we're going to have a roundtable discussion. Experts from across Europe will be talking to us about how this will affect the crypto market, both in Europe and probably in a way that it might become a blueprint for other regions across the world. My name is Solace-Rose Quartey. I'm a broadcast journalist, radio and television presenter from Ghana, currently living and based in Tallinn, Estonia. Welcome once again. So a little background about MiCA. It basically seeks to provide a legal, unified, transparent framework for crypto assets issuers and service providers which are not already covered by EU regulations. Now, data and consumer protection, anti-money laundering, and a few among key areas the regulations will seek to cover. And again, this is why we are here today, and I'd like to thank all of you for being here. We also have participants joining us online, watching our live feed. Thank you very much for that as well. And I'd like to acknowledge CoinsPaid, and they are also the reason why we're here today. Today is actually also the inauguration of this beautiful new office. I'm sure you walked around a little bit. And I would like to call on the CEO of CoinsPaid. He will be giving us the welcome address. Max Krupyshev is a renowned crypto expert with over a decade of experience in the digital assets industry. He's been at it since 2013, and in 2019, he formed or co-founded CoinsPaid, which is one of the world's leading crypto payment solutions and #1 digital processing and business crypto wallet. That's asset processing. Max, the stage is yours. You're welcome.
Hi, everyone, and thank you very much for coming. I really appreciate you being here and accepting our invitation. I mean, some of you are flying from different places across Europe. Some of them are just going from nearby. Some of you are based here. I'm really proud of everything that we managed to achieve with the help of some of you, of course, to get our own amazing office in the center of Estonia, in the center of Tallinn, just between the old city and the posh city, right? I'm speaking about the Rotterdam. I think the location is amazing. I don't know if you had a chance to have a look from that side. It has a view on the bay. I'm thinking that it's an east side, right, of the Tallinn. So the people who are very early here can maybe also enjoy a bit of the sunrise. But I remember when we just started in 2019, right? It was the CoinsPaid together was me and 4 developers, right? So we didn't really have a nice office. We were sitting in the small office in Minsk. So the guys were sitting in Minsk. I was living in Berlin and flying here and there. And I was thinking, when we get the business model right, when we get our clients, right, start generate revenue, we'll have a better office. At that time, of course, I didn't know where it would be, right? Always was a goal to have international business, right? But the idea of the office was even then, and it was so important for me to sort of get the traction going. But then a lot of events happened, right? And this is our first own office. I'm extremely grateful to Estonia, to FIU, to everyone who supports us here, that Estonia and FIU became our home for our company, for our organization, and for the first office that we have. In 2019, as many of you know, Estonian license didn't have the reputation that it has right now, right? It was more seen sometimes as authorization, right, as something which is arguably challenging to receive. But over the years, we saw that regulator improved, right? The regulation improved, the approach towards the business changed, and regulator sort of started to distinguish, right, what is the serious business and what are the bad actors or just the people who need a paper to do something maybe not very related to cryptocurrency even sometimes. Why Estonia in the first place, right? In 2019, you know, the options for crypto licenses was not huge, right? We saw that Malta was already speaking about cryptocurrency in 2018, but having their own reputational issues, right? And getting into the gray list of the FATF, right? Because of the Moneyval review, and this all sort of was moving that you should be selecting Estonia, right? And I'm Ukrainian, right? So for me, without the citizenship in European Union, it's a bit challenging sometimes to do something in European Union. But with the digital residency in Estonia, I mean, we realized that we can basically set up our house here, right? I can manage the company even being remote. I'm living in Germany, so it totally made sense. It totally made sense, and I really appreciated Estonia sort of like a first mover in this digitalization of running the business, right? Really establishing itself as a good sort of foundation for international business and for international founders as well. Estonian ecosystem, the crypto founders, crypto entrepreneurs, or even maybe not crypto, we would like, as being here, maybe sometimes being seen as the foreigners, we would like to bring to the economy, to the environment, to the business environment in Estonia, what we can, right? You see that our office is structured in the way that it is in quite a good location, right, where it's pretty much close from anywhere in the city. It's really in the central place. You see that we specifically planned this area here, right, which is unusual for an office, right? You're supposed to have meeting rooms, but this is a conference room, a conference hall for the events. Our idea, what we were thinking, right, what we can give to the local community of Tallinn, of Estonia, potentially to the Baltic states, maybe even Nordics. A place where people can host some webinars, some seminars, workshops, educational lectures, or whatever. I remember I started with cryptocurrency in 2013 in Ukraine. And the interest was there, right? So people were just curious, what is this blockchain? What is this Bitcoin? Because there was not much information. And I was struggling because I didn't have a place like that, right? To gather friends or colleagues or whatever to just speak, right? Someone has the idea, he wants to present it on the stage with the slides and so on, and we didn't have this place, we were in the cafes and so on. So we would like to give to the community the option to use this place for basically promoting their ideas, I don't know, discuss, share experiences and so on. Few more words about the regulation, right? You probably all know, right? In beginning of 2020, right, we had thousands of crypto licenses here in Estonia, right? To my best knowledge, right now it's 106, right? And we are in another wave of renewals of the licenses, so we believe that there would be less, but we're also quite sure that we should be the ones who get the license renewed. And this only says that the regulator sort of has a very strong approach to maintain their own reputation, right, as the country, as the regulator, as the legislator, in front of the whole EU states, right, and European Union. So by following, right, how regulator is, how legislation is, I must say that I feel very good that the regulator is showing their willingness, right, to be serious and transparent with how they change the way they treat businesses, right? Of course, there are some ups and downs, right? As we heard before in the morning, sometimes the ideas are very challenging for the businesses, but we see that regulator is happy to speak with the representative of the business, right, and understand if some things are just not doable, right, at all. So the regulator basically supports the businesses, right? It hears them out and makes the decisions which are weighted, right, and which help businesses to be compliant, serious, secure, and so on. Our business model is relatively simple, right? I know many people, you remember how it started, this industry was called Bitcoin industry, then it changed into blockchain industry, then it changed into blockchain cryptocurrency, right now it's Web3. Right, and for generations, this is just how the name of everything changes. I cannot say with the confidence that we are a Web3 company, right? We deal with blockchains, we deal with cryptocurrencies, but Web3 is something much more decentralized, right? I sometimes jokingly say that we are a logistics of blockchain, right? So we are not really doing some hardcore rocket science development of the blockchains. We help existing businesses, right, which is in this vocabulary, it's called a Web2, right? These are the companies who work in the internet, right? They already adopted the internet either for sales, for services, or whatever, and we help them to get exposed to this blockchain technology, right? We give them solutions, services, and software to be able to receive cryptocurrency, send cryptocurrency, buy cryptocurrency, sell cryptocurrency, right? Those are pretty basic services that we give them. And even despite of the crises that we face at the moment, I mean, many things, right? I mean, the latest one is probably the banking crisis, right? That we see right now. We see that the stock market is not doing extremely well, high level of inflation. The last year was quite critical for the crypto industry, right? I mean, many of you know, right? Started with Luna, then Celsius, 3 hours capital, ended up with FTX, and this year started with SVB and so on, and high level of inflation. I must say that the risk approach that we take, right, not only because of the regulation, right, but because of the common sense, our risk appetite in the sense of dealing with financials of the company and client funds has been always quite conservative, right? We don't grow together with the crypto market with the same speed, but we also don't lose our revenues if the market is in the red, right? So in 2020, right, when we saw many companies closing their doors completely, some of them are shrinking their staff, I don't know, 20%, 25%. The Coinbase, right, the biggest regulated and the publicly traded entity, closed last year with $2.5 billion loss, right, and as the bottom line of the income statement. We grew plus 100, right, so we doubled our size in 2020. We had a bigger growth in 2021 and 2020, but even despite of this crypto winter, we're still managing to do that. And this gives us really the opportunity, right, and the chance to invest heavily in the security approach, in the AML approach, in the CFT approach, investing into the economy, right, investing into the society by opening amazing office, right, and basically helping our employees. As me being from Eastern Europe, right, of course, you can imagine, right, that a lot of the technical stuff and so on we have from the Belarus, from Ukraine, even from Russia. And we basically, those people right now are slightly becoming the victim of the place where they were born, right? I mean, right now, living in Belarus and in Russia is is frankly scary, right? You can end up in prison just for not being agreed that killing the people is not fine, right? So those are a lot of challenges, and we sort of give it to our employees. We support them, and this is the philosophy of the company, right? Everyone who is close to us, right, who is helping us to build the business, I don't know, to develop what we believe in, this is our responsibility in the end of the day. Probably ended up with the MiCA, right? Because this event is not only the opening of the office, which we are extremely proud of course, everyone. We decided to organize this event, right, to speak a bit about the future, right? What is the future of cryptocurrency and blockchain here in the European Union? Right now, I mean, all of you in the industry are struggling a bit, right? I mean, you have a license, let's say in Estonia or somewhere else, you start speaking with the banks, and they say, you know what, we don't really believe that this crypto is legit. You're like, but we have a license. They're like, no, it really, like, it looks really strange. It's probably against banks or whatever. So a lot of misconceptions, and we see that there is no sort of overall decision, right, on the governmental level, on the level of the central banks. What is this blockchain, right, and what is our attitude? And I think MiCA, I mean, there are a lot of misconceptions, of course, what this regulation will be, how good it will be, how bad it will be, how this will be implemented, and so on. But the general idea, I think, is very clear, right? To have an universal set of rules for all European Union. This effectively will mean that being compliant in one place gives you the opportunity to be compliant in the whole European Union, and also setting up the basic rules and the base rules for everyone, for the regulators, for the tax authorities, for the compliance departments of the companies, right? For the businesses who are willing to use cryptocurrency, and for the customers who are willing to invest in cryptocurrency or to use cryptocurrency in their everyday life. So I think I'm very excited about MiCA. I'm very excited that Estonian regulator, I think, trying to be even one step ahead, right, of the MiCA, right? So if you are compliant here, I don't think that with the MiCA there would be something unbelievably difficult to change in the business model, in the reporting model, in the way how you work and operate. So I think MiCA is the great thing. I'm very excited that it will basically help all of us in the industry to be stronger. I think these are the benefits for everyone, right? For the legislators, because there is already the baseline, for the tax authorities, for the business participants, I mean VASPs or CASPs, right, as we call them now, for the businesses who want to use cryptocurrency, and for the public who will be protected, whose interests will be protected by this regulation, and so on. So guys, enjoy the conference. I hope you will like it, and I hope you will get something new for yourself, the new knowledge, new experience, and maybe new connections that you will build here. We will see each other during the breaks and so on. Again, really excited to have you all here, and we hope you like our new office and the event that we prepared for you. Thank you very much.
Thank you very much, Max. Let's squeeze through there. All right, then, I'd like to go over the plan for this conference once more. It's going to take the form of 4 presentations, and it will be followed by the roundtable discussion at the end of the day. There's also going to be an NFT exhibition, which was curated by Tamo Kupenia from CoinsPaid. So that is exactly what you have to look forward to today. Now, let's step right into our first presentation. This is going to be online. Our presenter is going to be able to address the following questions. Why is MiCA good for the industry? Which are the most relevant provisions in MiCA, as well as what is needed next? With a career dedicated to public sector, our next presenter is no stranger to the digital tech and finance sector, with a wealth of knowledge in SME financing, transport and tourism, border management, research, and the practical use of new technologies, such as those based on AI. Ladies and gentlemen, let's welcome Ondrej KOVARIK. He joins us online. Ondrej, can you hear me? Round of applause. Ondrej?
Hello and good afternoon. I can hear very well. Thank you very
Great,
much.
take it away.
Excellent. Thank you for the introduction, and thank you actually for inviting me to this event. First of all, my apologies. I'm joining you from Brussels. I was not able actually to travel to Tallinn, which I regret heavily now after hearing Max and his great presentation. But I hope we would manage to meet sometime in the future. And I would like also congratulate CoinsPaid for the new headquarters in Tallinn. I think it is exciting. And actually, I didn't really coordinate with my intervention with Max's introduction. But to be honest, I think this very conference room where we meet today virtually is in my view a perfect materialization of what I'm going to talk about now in terms of what's next for MiCA after it enters into force. So my big pleasure to share with you a couple of thoughts on this regulation, but I think also on the broader context of the regulatory framework in the EU when it comes to crypto assets. First of all, it is actually a very timely discussion that we're having today. Next week, the European Parliament convene in Strasbourg for the plenary session, and we will discuss on Wednesday afternoon the regulation, the markets and crypto assets regulations, together with the crypto dedicated AML part, which is called transfer of funds regulation, and we will vote on them on the next day. And this will be basically a formal step that is needed to make sure that MiCA and the entire regulatory framework can finally enter into force. It took some time. The Commission presented its initial proposal back in September 2020. So it's almost 3 years. I agree. It's not very fast, especially given the fast-paced development in the sector. But I think it was important for me actually to take our time, make sure that once we introduce rules for the crypto assets industry, that they would be stable, predictable. They will stay with us for some time, and I think this also required some considerations and work and negotiations on the side of EU institutions. If everything goes well with these formal steps, which do not actually change what's the substance of the regulation, but basically are more procedural steps that we have to be carried out in order to make sure that this law enters into force. I would expect that the entry into force will come in the next couple of months, possibly June or July, and then the transition period or the period before its full application will start to run. That is in general terms 18 months. So I think what we will be discussing today, and you will be discussing also through various panels today, would become a reality as of the beginning of 2025. So that would be, in my view, the full application of the rules that will be adopted soon. I was delighted actually to hear Max on praising the benefits of the regulation. Throughout this period of preparation and negotiation, we heard many voices, and there was a lot of people also not very happy to see regulatory attempts coming into a sector which was basically at the very beginning more an attempt actually to create an alternative world of financial services and finance in general, outside of the scope of the regular financial services and the financial regulation. But I think in many points that Max raised in terms of what the regulation can bring in positive terms to the industry, I think that these were very, very correct. And I hope that they will show when the regulation will be fully applied in the European Union. It may seem that by adopting the act, the regulation, that the works is actually done for us in EU institutions, but I keep saying that it's just the opposite, and I'm really happy that there's a new conference room in Tallinn where you can actually discuss new issues, because I believe that with the adoption of MiCA and its entry into force, that's a real beginning of actually bringing MiCA into practice and making sure that it can be implemented in a way that the benefits that it should bring, that these benefits will be fully visible. And I think for that there's definitely a need to raise awareness, to discuss details. In terms of substance, MiCA is actually quite a long and complex regulation. It covers many issues from issuance of tokens, the categories of tokens, the consumers' rights, requirements for crypto asset service providers, specific requirements for stable coins. There's many of them. So I think it would really require awareness raising exercise throughout the industry. But not only, I think it is actually a new type of legislation covering uncharted territories. And I think for this, in my view, it is definitely necessary that there is also awareness raising from the public sector side, from the supervisors, from the regulators, from those who will be actually in charge of full enforcement of MiCA. And I think for that, in my view, the best way forward is actually to engage in continuous mutual dialogue between the industry stakeholders and the public sector representatives, the public authorities, because that, in my view, would be the most effective and optimal way actually to go ahead with the proper implementation of MiCA. I think it would basically be a learning process on both sides. And for that, in my view, the discussions are very needed. And not only because there may be a lot of practical questions related to the implementation of MiCA, such as how exactly the licensing process will look like, how this would be also translated into the possibility of passporting the license into other EU member states. What would be the supervisory role of the national authorities, but also of those authorities that are actually given competencies on the European level for securities markets, for instance, or the banking authority, and many others. So I think in this regard, definitely the mutual dialogue will be needed on one hand, and on the other hand, I think this would also maybe help to promote mutual activities such as sandboxing, for instance, bringing together the industry representatives again the public authorities, and actually trying to figure out what in practice would be the best way forward. And I think that would be, or I would like you, if you want to take away from my intervention one thing, it would be this message: a call for mutual engagement, for further engagement, both on the industry and the public sector side, to actually make sure that these rules will be understood properly and also will be implemented properly. I think that is a key. MiCA is still a regulatory framework on the paper, and we need to make sure that it will be fully implemented. And the next reason is that even though the MiCA itself, the regulation itself, is really dense and complex piece of legislation, it will still require some additional work that would have to be done by the European Commission, by the supervisory authorities on the European level, to complement the set of rules with technical standards, with the secondary legislation that will work on some specific issues, and also, for instance, to cover areas which are in this moment are not covered by MiCA itself. Specifically, for instance, the area of decentralized finance. The Commission will, after the entry into force, prepare in next 18 months an assessment, an evaluation, a study that would specifically touch upon the issue of decentralized finance to see whether it would require in the future additional regulatory measures, or it can actually be implemented as it stands, for instance, under the MiCA regime, and what would be also, I think, the critical parameters to follow for the regulators and for the supervisors, how to distinguish whether we can definitely speak about fully decentralized projects or projects that may look decentralized but would rather be covered by the existing MiCA rules. So I think this will be important, and in my view, this is also a type of exercise where the inputs, comments, suggestions, testimonies from the industry would be definitely helpful, also for the Commission and for the others that would deal with these issues, because it's actually the industry, it's the stakeholders, it's the businesses, it's you that have the best overview of the current trends, current issues, or let's say also new areas that are covered. So I think there's many issues that can be elaborated in this regard, and I would definitely call for very active engagement of the industry in this regard. We discussed the benefits, and I think Max mentioned a number of points. Benefits of MiCA for the industry. I think indeed there is definitely this issue of, and this was one of the concerns also on the parliamentary side, the issue of the overall credibility of the sector, be it vis-a-vis the investors, the consumers. So MiCA enhancing the consumer and investors protection issues, for instance, by introducing the requirements for presenting white papers and then giving some reassurances when it comes, and guarantees when it comes to, for instance, issuance and use of stable coins, but also credibility of the sector towards the other financial institutions like banks. I think very frequently mentioned issue of banks not being able to cooperate properly with the crypto service providers, denying the possibility of open accounts, difficulties with the offboarding and onboarding issues. So I think there's a lot of things that are currently the CASPs are facing in reality, and I really hope that at least some of them, if not all of them, could be remedied through the application of MiCA. And also I think credibility, it has been mentioned as well, the credibility of the service providers and the crypto assets businesses towards the regulators and the supervisors, where I think there was, in my view, there was a number of various approaches that the national regulators adopted. I heard some central bankers saying that their approach was extremely passive, not helping, not intervening. There were other jurisdictions in Europe where they were more active in terms of offering a national set of rules that would help to solve the situation. And I think the testimony that Max gave us on the licensing issues in Estonia, but I think also in other countries, it shows that we were actually 3-4 years ago facing the situation where there was a risk of basically creation of patchwork of national rules for crypto industry, which would be quite difficult actually to comply with. If it's different in France and Germany, if it's different in Malta and Luxembourg, or in Baltics. So I think what MiCA should bring, and I see this as one of the key benefits, is actually sort of unification of the rules across the EU. And also, in my view, emphasized by the possibility of passporting the license from one country to another without a necessity going through licensing processes in every single EU member state. Once again, if, for instance, the market expands or there's a rollout of activities across the single market. So I think this is very important. And obviously, the licensing issue would be in my view, the first real testing exercise of how MiCA is implemented and how it works. We heard about 100 licenses in Estonia currently. There are many countries. I come from Czech Republic, where there are thousands of providers that are currently registered. There's no specific licensing process, but they are registered as providers of those services. So I think when the MiCA enters into force fully, and it will be fully applied, one of the most busy people in the regulators on the regulator side would be those dealing with licensing procedures. Maybe not everybody that is actually currently working in the area would apply for the license immediately, but I think sooner or later, in my view, there is this understanding also in the industry that actually the license can help and make life easier also on those issues where currently the businesses are facing some problems. But this will be definitely a first test, and we all need to get ready for it. So I think my understanding is there's a lot of public authorities already currently now studying fully the text of MiCA and preparing also in terms of human resources and financial resources for the licensing procedures. But I think it will be basically the same thing also on the industry side. And again, the best way how to manage this, at least the first shock of a lot of actually applications for the licensing coming from the industry would be through a mutual cooperation and good understanding on both sides of what is needed, what is required, and what is possible. So I think this is definitely a critical moment. If we manage to pass this moment well, then I think there's a huge probability that MiCA itself can be a success. Let me mention just 2 points at the end of my intervention. One is actually, if you look beyond MiCA, what's actually going on? Because we see that there is now much more, let's say, crypto awareness also in the existing regulation. And MiCA will definitely not be the only one that would apply to crypto service asset providers. I mentioned the rules on anti-money laundering and counter-terrorism financing. There is currently a review and discussion on the European level what the new rules should look like. There will be a new authority created on the European level on AML issues. And I think, in my view, there's also a need for the industry to follow and engage in these debates, because they may have an impact on the services that the businesses provide. There has to be a consistency. MiCA has to be fully consistent with other regulatory framework that we are preparing, and I think this is definitely our part to do, but at the same time, I think critical for the industry to follow. And there will be other rules on banking requirements and et cetera, et cetera. So definitely important thing. And last point I wanted to mention, and it has also been already touched upon, it's the international dimension of MiCA. The European Union is actually taking unprecedented step in terms of presenting a really complex, comprehensive regulatory framework on the entire single market, so valid for 27 member states, for crypto assets. And there's no such a reference across the globe. But at the same time, we see there's a lot of interest from other jurisdictions, from the US, from North America, from Asia. People asking, what we expect from MiCA, what it can bring. And I think this is actually a very good opportunity to make sure that, if possible, to make sure that MiCA can become an inspiration for global standards. So when countries like G20 start to work on regulatory framework for crypto assets, that they can be fully inspired by what is currently in MiCA. And that would, in the end, in my view, also facilitate life of the industries. If you want to provide your services outside of the European Union, and the rules that would apply there would be somewhat similar, then I think it can make it much easier. But this is I think a long-term goal that we would need to engage in, but I think it's a very important one if we want to make a success. So that would be it from my side. As I said, once we finalize these formal steps, we actually get into, I think, the critical phase of preparing for full application of MiCA, and I really call for mutual engagement on both sides. On my side, I'm definitely ready, as I was during the entire negotiations of MiCA, and I met a lot of stakeholders. I spent a lot of times in meetings with the industry and the other stakeholders. And I think this is also our duty to actually continue in this dialogue and make sure that what we believe is actually a good proposal, a good outcome of the negotiation in terms of the regulatory framework, that we also confirm that when it's fully applied. So once again, a big thank for the invitation. Congratulations to the inauguration of today, and I'll be happy to stay with you for some Q&A session if time allows. Thank you very much.
Thank you very much, Ondrej. All right, so before you leave, address this for us. Based on everything that you've said, what combination of services do you think would produce the highest risk with regards to the crypto industry and MiCA? Which one should we look out for the most?
What combination of services? Well, I think, I mean, in my view, let's say the traditional services that the crypto asset services providers provide today should normally fall into the scope of MiCA. I think the difficult situation can always come up with the sort of these border case issues that I mentioned. For instance, the decentralized finance. So my political stand was not to include the decentralized finance into full scope of MiCA, but definitely there may be some border case, saying like, oh, but this kind of project is rather considered in fully in MiCA regime, and I think this would be in my view the critical part, and the other critical part it was what I mentioned to the end of my intervention. It's actually the consistency with other legislations. So, for instance, we can have a understanding when it comes to application of MiCA rules, but MiCA is actually not covering at all or very little the issue of anti-money laundering. So, if we actually come up on top of MiCA with very hard anti-money laundering rules, which would again legitimize some of the practices, for instance, of banks and other financial services providers, the legacy financial services providers, let's say, then we would not make any difference, and we could even make life of some of the businesses more difficult. So I think these, in my view, are the critical parts to look into to make sure that the MiCA framework is actually used to the benefits of businesses rather than to complicate their lives. Obviously, if and it was mentioned earlier, if a business is engaging in activities that are not fully legitimate or not even legal, then I think that's why the framework is there, and that is also why for instance the license can be withdrawn or are not granted. But I think these issues that I mentioned at the beginning would be, in my view, the most critical ones.
Okay. Thank you very much for joining us, Ondrej. A round of applause, please. Now, Ondrej KOVARIK is a member of the European Parliament. He's a shadow rapporteur for MiCA. Once again, thank you for joining us. We'll move on to our next presentation, but before that, I'd like to remind you that you can get interactive with us right here. If you want to ask questions, there is a QR code that should be displayed here right about now, slido.com. You can use your phones, log in. There's a code over there, the hashtag 1907973. You get to ask any question whilst the presentations are going on. And when I mount this stage, I will attempt to ask as many of them as time would allow. For those of you online, you will have this QR code as well. You will be able to ask your questions there on the Slido. Once again, this is MiCA entering into force. My name is Solace-Rose. Let's move on to our next presentation. Now, the That was a little bit excited there, but let's move on to the next presentation. Now, the democratization of payments is at the core of the purpose of developing crypto assets. Now, so as we examine MiCA, it would be remiss of us not to throw the spotlight on the aspect of payments with regards to this regulation. And our next presenter will delve into the impact enforcing MiCA will have on payments in Europe. He's a senior advisor for EU regulation at Mastercard, where he is in charge of monitoring legislative and regulatory initiatives, compliance with payment systems legislation, competition law, and central bank oversight. Ladies and gentlemen, I welcome on stage Christoph Baert. A round of applause.
Thank you very much for this very kind introduction, and also thank you very much for the previous speaker, Ondrej, for the very insightful overview of the MiCA regulation. As we all know, MiCA is a complex piece of legislation. It will keep lawyers and the whole crypto industry busy for some time to come. In this presentation, I would like to zoom in a little bit more into MiCA and with a specific focus on payments, which is what we at Mastercard, I would say, are good at, having been around for 60 years. Europe is facing a lot of innovation in payments. The way we pay has already changed radically in the last few years. We've gone more digital. Digital transactions are steadily on the rise. We're used to paying with our smartphones or watches. We also have more payment solutions to choose from. But the way we will pay will probably even change more in the next years. Consumers' expectations and innovation stimulate new solutions and drive the transformation. However, regulators are also playing a leading role in steering our payments industry. The 2020 Digital Finance and Retail Payment Strategy from the European Commission are reshaping the European landscape. We have a new momentum for instant payments, which the European Commission expects to become the new normal for payments. This will require the industry to move resources on the instant payment rails and make the most out of this. Therefore, instant payments will become more competitive and more widely used. We may also have a digital euro quite soon. A digital euro will provide citizens and businesses with yet another means of electronic payments, a public one. The European Central Bank has consistently reassured that the digital euro will not crowd out existing means of payments. However, if implemented, the digital euro will represent a major change for the European payments industry. And then we have the MiCA regulation. MiCA is not specifically about payments. We have the Payment Services Directive, the PSD, for that. However, MiCA may impact the way the payments industry will evolve and innovate. MiCA acknowledges that crypto assets may have a role in payments, especially when it comes to cross-border payments. Cross-border payments is where the friction is still particularly high. Innovative solutions are therefore much needed to make cross-border payments cheaper and faster. When MiCA refers to the potential of crypto assets and payments, it mostly refers to the so-called stablecoins. As you know, stablecoins are crypto assets that seek to maintain a stable value by referring to other assets or currencies. Usually they are backed, at least in part, by reserves of those assets and currencies. At least this is the claim. MiCA will make sure that this is guaranteed. The Financial Stability Board and the G20, the works of the G20 on cross-border payments confirm that stablecoins could play a role in shaping the future of payments. A lot of work is ongoing at international level to investigate how to come up with a regulatory framework for global stablecoin flows. As of now, stablecoins are mostly used to buy other crypto assets or fuel decentralized finance applications. They serve basically as a bridge between fiat currencies and the crypto ecosystem. Their role for day-to-day payments is very limited, almost non-existent. I can buy a non-fungible token with stablecoins. I will probably not be able to buy milk or a train ticket. But we are here to speak about what may happen tomorrow. There may be several reasons for the marginal role of stablecoins in day-to-day payments. There may be technical, scalability, efficiency issues that do not make stablecoins as attractive as other means of payment. Lack of trust plays a role in this. Consumers, merchants, and payment services providers need trust before they can use, accept, and provide new channels to move money. And we all know that trust is a pain point for the crypto industry. The FTX scandal and the collapse of the Terra stablecoin have not yet been forgotten. Yet, the crypto industry needs to regain trust if it wants to have a chance to bring its solutions into our day-to-day payment habits. Clear and effective regulations can go a long way in building that much-needed trust. Rules and clarity are the building blocks of trust, and this is where MiCA kicks in. MiCA will be a powerful tool to build a European crypto market that is safe and trustworthy. It will drive the market acceptance of crypto solutions and may also facilitate the development and uptake of payment services based on stablecoins. Mastercard welcomes that. We support rules that bring clarity and a level playing field for the industry. As the previous speaker outlined, MiCA differentiates stablecoins into two categories: asset reference tokens and e-money tokens. In principle, both can be effectively used as a means of payment. However, e-money tokens will likely have the lion's share. The defining feature of an e-money token is that they mirror the value of a single official currency. For instance, an e-money token may be denominated in euro. In that case, one e-money token will be equivalent to €1. This equivalence makes it easier for consumers and merchants to relay to e-money tokens and therefore to use and accept them as a means of payment. MiCA could provide us with the much-awaited regulatory clarity to enable this. Under MiCA, e-money tokens are essentially treated as e-money under the e-money directive. This means that for the most part, the same regulatory regime applies. This also means that for payments with e-money tokens, the rules and protections under the Payment Services Directive in principle applies. The PSD review will hopefully make it clearer how payment services rules and MiCA interact. Issuers of e-money tokens should be authorized as credit institutions or e-money institutions. The respective prudential and capital requirements will therefore apply. To enhance consumer protection, MiCA also clarifies that the holders of e-money tokens can always redeem their tokens at par value. If I have one e-money token denominated in euro, I can ask the issuer to convert it back to €1 at any time at no cost. These safeguards may go a long way in helping the development of stablecoin payment solutions. Consumers are more likely to trust well-regulated and licensed companies to move their money. Consumers are also more likely to give a chance to stablecoins if they know they can convert these back to bank money or cash if they change their mind. Having a clear and harmonized regulatory framework may also encourage payment companies, processors, and merchants to develop, test, and offer payment services based on stablecoins. However, MiCA's support to stablecoins is not unconditional. MiCA is about innovation and competition, but it is also about steering this innovation in line with the European geopolitical agenda. One of the most evident examples of this is the cap on stablecoins that become too successful as a means of payment. MiCA requires an issuer to stop issuing its stablecoin when used for more than 1 million transactions per day with a value of more than 200 million euros per day. Just to put this into perspective, there are about 300 million non-cash payments in the euro area every day worth more than 500 billion euros per day. In practice, MiCA requires stablecoin issuers to discontinue its business and adopt measures to cease its proposition until the payments with the stablecoin fall below the allowed threshold. This requirement may have a stifling effect. Stablecoin issuers may be discouraged to promote payment products if they know their expansion will be capped. They may not want to encourage consumers to pay with stablecoins, knowing that one day they may have to reach out to those consumers and tell them that they can no longer pay with their stablecoins. However, not all stablecoins are made equal. E-money tokens denominated in the EU official currency, the euro, are indeed excluded from the cap. What does it mean? It means that stablecoins that are pegged to the euro, or let's say to the Swedish krona or the Polish zloty, will be free to be as successful as they get in payments. Stablecoins, on the other hand, that are pegged to the US dollar or to other assets instead will be subject to the cap requirement. There is a clear sovereignty and geopolitical rationale in this. As the most successful stablecoins are pegged to the US dollar, the EU does not want to take the risk of a dollarization of the European stablecoin market. The EU wants European-centric solutions to take hold. This limitation does not come unexpected. Payment sovereignty is one of the core drivers of the EU payment strategy. This is at the core of initiatives such as the Instant Payments Proposal and the Digital Euro project. However, there are potential drawbacks to this approach. Today, stablecoins denominated in US dollars greatly dominate the market. Basically, dollar stablecoins is what the market knows best and what the players rely on at the global level. This is therefore where we may expect much of the innovation to happen. A hardcore cap on dollar stablecoins may have the unintended consequence of isolating Europe and inadvertently discouraging valuable payment use cases. Perhaps a more balanced and risk-based approach could have been explored. This is also considering that there is already a general provision under MiCA that allows regulators to limit the issuance of stablecoins in case of threats to the European monetary stability and sovereignty. For sure, much will depend, as also the previous speaker said, on how the requirements from MiCA will be implemented and enforced. We know that MiCA will require extensive level 2 implementation to flesh out its requirements. This will be a key step in ensuring that MiCA is fit for purpose and stimulates the right outputs from the industry. Mastercard will be there to cooperate with regulators and will advocate a clear and business-sensible implementation of the MiCA rules. The way regulators will enforce MiCA will also be key. MiCA sets up a regime which mixes national and European supervision. It is important that EU authorities provide clear guidance and expectations when national authorities are in charge. This to avoid fragmentation and regulatory arbitrage because of different national enforcement. There should be uniformity in the way MiCA is applied across Europe, to promote fair competition, ensure a high level of trust between the member states, and avoid that the passporting principle is abused. Of course, MiCA does not come alone. It is a piece of a wider EU integrated approach to regulate crypto assets and crypto transactions. For instance, as part of the anti-money laundering package, the EU has extended the so-called travel rule to crypto asset transactions. This means that crypto asset service providers will be required to collect and transmit information on the senders and the beneficiaries of crypto asset transfers. We should also mention that the Euro system of central banks introduced oversight rules for electronic payment instruments, schemes, and arrangements, the so-called PISA framework, which entered into force a few months ago. PISA oversight will complement MiCA supervision, as it will also apply to schemes and payment arrangements involving digital payment tokens. By way of example, the European Central Bank has clarified that PISA will apply to services such as the acceptance of crypto assets by merchants within a card payment scheme and the option to send, receive, or pay with crypto assets via an electronic wallet. The PISA rules may also help in addressing some of the shortcomings of MiCA. Contrary to MiCA-based supervision, the PISA oversight applies regardless of the country of the stablecoin issuer and the crypto wallet provider. It is sufficient that a transaction involves a user within the euro area or a token denominated, funded in euro, partially or fully backed by euro, or redeemable in euro, regardless of the user location. For sure, regulatory clarity is not enough for stablecoin payments to get traction. The competition in payments is fierce. There's no shortage of options to pay digitally in Europe. Plus, new means of payments may also be on the way, such as the digital euro. To gain momentum, therefore, as a means of payment, stablecoins will therefore have to be attractive for consumers and merchants. They will have to deliver real-life benefits and win consumers' loyalty. Instantaneous settlement and irreversibility could be one of those benefits of stablecoin payments. Today, we can authorize payments in a matter of seconds, 24/7. However, when it comes to moving the money behind the scenes, we are still very much dependent on bank rails and bank office hours. Privacy protection could be another area where stablecoins may score higher than other means of payments. This is where we can have competition. Programmability of payments may also be an attractive feature and a driver for innovation in stablecoins. Once stablecoins find a value proposition for payments, you also need to embed this in a trustworthy and widespread acceptance network. And this brings me to what is Mastercard's role in crypto. Crypto assets are an area of increasing strategic focus for Mastercard. We believe in the potential of crypto technologies and solutions to improve the way we transfer value and information. Our guiding principle is simple: your money, your choice. We are not here to suggest that consumers and merchants should buy crypto or that they should pay with stablecoins rather than with any other means of payment. Our role is to enable choice for consumers, merchants, and financial players to move digital value in a seamless and secure way, no matter if we speak about traditional bank money or crypto assets. In the crypto asset world, Mastercard will therefore continue to do what it does best. We will act as a trusted orchestrator and facilitator in the ecosystem. Through our global network, we can connect traditional financial players with the new crypto asset actors and allow them to unlock new synergies. As a trusted partner to the industry, we will enable our network participants, be it commercial banks, central banks, and any other regulated players, to issue and transfer digital tokens in a secure, compliant, and trusted environment. We are increasingly expanding our support to the crypto asset ecosystem. Our propositions will grow as the ecosystem grows. Mastercard is already collaborating with its licensed partners and trusted crypto asset service providers to offer consumers a safe channel for purchasing and exchanging crypto assets. Our crypto card program allows consumers to spend their crypto assets across our merchant acceptance network in a safe and reliable way. We want consumers to be able to use the payment tools they are familiar with to pay with their cryptos while also maintaining our brand promise, for instance, in terms of liability, fraud protection, and dispute management resolution. We have also developed a set of analytics and fraud detection tools to ensure that crypto transactions are safe, transparent, and compliant with the regulations. Our Cipher Trace solution helps in detecting frauds and eases compliance with regulations, including the travel rule, other AML obligations, and sanction screening requirements. In this way, we can ensure that we maintain the highest level of consumer protection in our systems. Finally, we are exploring how to put all this together in a single multi-token network. We believe that the future lies in integrated services that could serve a wide variety of actors and digital tokens within a single network. We are therefore working to accommodate crypto assets, CBDCs, and bank money within the same trusted ecosystem. This would ensure interoperability among assets and the widest possible choice for consumers and merchants. Multiple rails is what will enable choice and frictionless experience in a world where different payment instruments come into play. Therefore, in conclusion, this is an exciting time. We do not exactly know where this will lead us and how MiCA and crypto assets will transform the payment landscape. What we can be sure of is that Mastercard will be there to unlock the opportunities that this transformation will allow. Thank you very much.
Thank you very much. Let's see whether we can look at a few questions. So, for instance, do you think that MiCA would give the EU a competitive advantage over other jurisdictions, for instance, like the US or China?
I think, as it has been also mentioned by the previous speaker, I think Europe is quite good at coming up with, let's say, leading and the most innovative or the most, let's say, consumer protection pieces of legislation. I think maybe the best example could be the GDPR. Yeah. Where other jurisdictions may very well be inspired by what the EU does. And therefore, I think, again, with MiCA, I think Europe is playing in a leading role. And to the extent that these standards are actually bringing the much needed, let's say, trust and legal certainty into the system, I think this is very much, I would say, an asset where Europe should be seen as a preferred place to do business and invest. And therefore, I think it is actually bringing an attractive and pro-competitive asset to the Europe region in competition with other parts of the world. Yeah.
Thank you very much. One more question. How do you think MiCA will impact traditional financial institutions such as banks, card issuing organizations, as well as fintechs and VASPs?
Well, I can only speak for Mastercard. And as I was saying, Mastercard takes or invests heavily in this. Crypto assets are here to stay. They bring a lot of innovation. And therefore, yes, it's yet another means of payment.
All right. Thank you very much. A round of applause, please. Christoph Baert is a senior advisor for EU regulations at Mastercard. So for us here in this conference room, we are going off to a quick break. This will last for about 20 minutes. However, as you all know, we do have online participants, and so this is going to happen simultaneously. Whilst you're on a break, those of you watching us on our live feed will be getting another presentation. So basically, the sessions continue for you, those of you joining us virtually. So for 20 minutes, you can go out, have some drinks, interact, network, and I'll present the other part for the next session. Now, for the online session, we're going to clear out the room nicely. See you in 20 minutes. All right.
Раз.
All right, so for the online session, we have Raido Saar and Max Krupyshev. So basically, we would have a one-on-one session between them. I would like to introduce Raido Saar once again. He has been developing legal regulations in the field of crypto since 2014 and also serves as a chairman of the Estonian Web3 Chamber. And he will have this sit down with Max Krupyshev, who we've already introduced as the CEO of CoinsPaid. And they'll be talking about the journey to becoming a formidable force in the crypto sector. That's CoinsPaid's journey. And a little bit of history there. So for those of you who have joined us online, this is for you.
Hello, everybody. So, hello, Max.
Hi, Raido.
In the beginning, it was presented or asked by CoinsPaid that we will have some kind of presentation, like a free stage for some companies from our members. But in the end, we decided that as this is the very important event for CoinsPaid, and I'm very sad that our viewers behind the screens are not here because they are missing such opportunity to see, in my opinion, the biggest crypto office in Northern Hemisphere. Maybe I'm outrating a little bit, but not too much for sure. But this is 700 square meters with office spaces, meeting rooms, area for relaxing. This is amazing office. And that's why I think this is worth to give this 20 minutes for you as how all started and how did you get here? Because yesterday when we were in the dinner, I think it was like very interesting what you said about the year 2019 when everything for CoinsPaid started. So I think let's go with that. And I would like to ask first that what was the first crypto? What was your first encounter with crypto, as per se?
Yes. Thank you very much for compliments regarding the office. We also love it very much. So anyone who is watching us online, if you are here in Tallinn, please come. Yeah, I started, basically I started working in IT space as the co-founder of IT company. We were doing some outsource for Europe, for US clients. And I was a non-IT guy, right? So I'm not a software developer, so I was mostly managing the operations, speaking with the clients and doing a bit of accounting. And basically in 2013, in summer, one of the developers, I think he was 17 years old, so he was sort of like still a student who was working, and or maybe 18. And he said, Max, have you heard about Bitcoin? I was like, this is the word that I never heard before. And he was like, this is the cryptocurrency. And he started explaining me mining. And he explained it very bad. I was like, so like, it doesn't make any sense, right? Why would you do that? And he's like, no, Max, this is the future. So I didn't understand it. I blame him, right? it was not explanation on the very high level. But then in November, November, the co-founder of this IT company, he has a friend who was mining Bitcoin with some small ASICs, right? Like very, very small, like 1 kilowatt or 2, right? Like the box is like that. And he was like, hey guys, there is this Litecoin which you can mine with the GPUs, right? So with the graphic cards. And I was like, okay, so what we do? They say like, let's spend like $500 to have a rig and see what it does. And we did it, and I had the SSH access through the console to the machine, and I was restarting it sometimes when it was down and so on. And I was like, okay, I have to understand what is really happening in that box. Litecoin is the clone of Bitcoin, right? So pretty much everything is the same except of some minor changes just in the algorithm. And I started reading in the internet. There was not so much information in 2013, right? It was not like right now you have these educational courses from the universities, from crypto companies and so on. There was like a pieces of information. Many of it was misleading, low quality and so on. And I just spent, I don't know, weeks because I was curious. It was not a task from my boss, right? It was not like I was instructed to do it in the university or school. I was just curious. This was out of pure curiosity. And the more I got in, the more I understood that I really liked the concept. So there was zero motivation, right? I didn't want to buy it. I didn't really have money to buy it. It was out of the pure interest. So this is how it all started. Then for the next year, we basically started a startup with another friend. So we wrote the wallet for iOS, because at that moment, in the beginning of 2014, Apple threw all the crypto-related applications from the App Store. So we developed a web one using the interfaces of iOS 7. Right? So it was like it looked like a native app, really, but it was a web app. So it was the first startup that we did. We didn't have a good vision, really, how to make business out of it. I even went to one of the investor funds in Ukraine. I had a meeting with the investment analysts, and I say, guys, we created a wallet. We can add exchange here. And so we basically explained the business model of crypto.com. And they were like, no, this cryptocurrency is too risky. We are not even looking at this. And one thing that I still remember, one of the reasons was, this cryptocurrency, you cannot see it or touch it.
Yes.
And I was like, I am in the wrong place.
Exactly.
I am in the wrong, I'm speaking with the wrong investor. I mean, it was 2014, right? It was not in the Middle Ages. So yeah, and then I was hired by CXIO, Ghash as well. Ghash was an amazing experience because they had 52% of Bitcoin mining, right? Which was like, with the potential to basically control Bitcoin. So it was very interesting. And then since then, I'm pretty much since 2014 completely in the crypto. I helped a lot the Ukrainian movement. I was one of the first who started creating some sort of meetups in Ukraine. We established Satoshi Square Kyiv, which is the place where entrepreneurs, enthusiasts meet, discuss ideas, and also this is the platform where you can buy, sell Bitcoin between each other. And then Bitcoin Foundation Ukraine, which transformed more into the platform which supports the local regulation, local startups, and so on. But then I moved out from Ukraine, so I'm not heavily involved in this anymore.
Okay, and about the CoinsPaid, first steps.
First steps. I think first steps of CoinsPaid started way before CoinsPaid. In 2015, I had a meeting with the person who was saying, why don't we use cryptocurrency as a payment method? And I was like, maybe it makes sense. I mean, you can transfer it, you can exchange it, sort of have all the definitions of the crypto payment. At that time was already BitPay raised $83 million, right? Was 2013, end of 2012, I think they started raising money. So it was like, it made sense. With that, guys, nothing really started. Then in 2015, I was acting as a product manager and then as the business development manager with Qubits. It existed since 2015 to 2017 late. And that is where we sort of understood that this business model can work. right? So we got a proof of the concept, basically tried different industries, different approaches to the risk, to transaction flows, to APIs, what merchants really need, right? So we played with a lot of the concepts and understood what is working. And then basically I knew the original sort of people behind the idea of the CoinsPaid. They already created the name, but there was still no business, right? So I pretty much acting as a co-founder, right, who helped to relaunch what was the idea and the code to create a business out of the idea and the code, and sort of brings a bit of my own inspiration. This happened, we started talking in the beginning of 2019. We started sort of discussing the ideas, what we can do together, what is the vision for the business, what is the vision for the product, negotiating with the team which already was behind CoinsPaid. I think it was like 3-4 people. Since May or beginning of June 2019, we decided that I will head the project as the CEO, right? And that is pretty much how far we went since the June 2019.
I know that explaining people those times, 2019, 2020, even today, for entrepreneurs is kind of difficult to explain why crypto, why should I have it? I don't want to touch it, as you mentioned yourself. So what was your go-to-market approach? How did you get yourself to the point where you have now transaction every 3 seconds?
So people who live in European Union, the view of how we use money, how we store money, is relatively romanticized. Maybe it's not the most correct word, but me being from Ukraine, I mean, you never hold hryvnia, right? You don't really get rich by holding the national assets. The controls to buy dollars or euros, this is not always a very straightforward way, right? The exchange rate is different in the banks, the real exchange rate is different, right? So it's not always easy, right? And it's also, I believe that there are many sort of the countries like that, right? I believe majority of the African region is like that. In Latin America, we see a lot of challenges like that. In the Southeast Asia, of course, no one holds Indonesian rupiah and really stores their value in Indonesian rupiah because this is sort of shaky, right? Everyone willing to diversify in something different. So people who are not living, in such a developed places like European Union or US, they are always more creative with how they store money and in which assets. They are a bit afraid of banks, right? Because banks sometimes go bust, right? With all your money, right? In Europe, we have this insurance, right? That a part of your money is insured. In Ukraine, part of your money is not insured. All right, so if the bank disappears, it disappears together with your funds. If hryvnia decreases in price, your money, you basically losing your
Assets.
Your assets. The same as with inflation that we had in Europe, right, which was significant in 2022. So those people, they have cryptocurrency, right? They have it already. And if they have it already, why? I believe that first starts the curiosity, the investment tools, and financial freedom, right? Those are 3 main drivers where people start using cryptocurrency in the first place. And now, when you speak with the people who have businesses in Eastern Europe, in Africa, in Latin America, and so on, they, of course, accept payments with cards, right? With Mastercard, obviously, with Visa. In Latin America, it's also with the PIX, right? In Asia, I don't know, with the CUP, with some other methods. But they come to understanding a fair amount of our clients also have assets in crypto. Then they compare simple math. Accepting crypto is cheaper than the cards or PIX or whatever. It's quicker than the banks. It's purely international. You don't need to have a special provider for every country. So it's pretty much international, it's instant, and for some business models, it's important that it is irreversible. So the client cannot change their mind, right? It's a tricky one, right? Because this is the protection of the interests of the customer. But as we spoke yesterday, right? Cryptocurrency gives you the power, but also responsibility, right? So I think it's not a big. So I don't think cryptocurrency might go into the philosophy that that the card issuers have, right? That money that you spend with the card, we will help you to get it back if you are a victim of fraud or scam or whatever. With cryptocurrency, this is not really realistic. So 3 things, right, which sell to the international businesses. If we speak about very local business in Estonia, for example, it's very hard to sell the value of accepting cryptocurrency because it's sort of a community, right, which has their own sort of trust, right? They don't have challenge with being international. They don't care so much about being instant, right, because there is a level of trust, and instant is not so critical. And irreversibility, I mean, in Estonia, right, where people pretty much know each other, right, is relatively small and proud sort of ecosystem, right? The place for the scam or fraud to appear is not really on the table, right? So you don't have these challenges to overcome. But international businesses, they already have this request to use crypto. Software companies who, I don't know, who sell the software for all over the world. The marketing agencies, right, who resell the services between each other, right, the traffic, the banners, and so on, they have to move money quickly between the suppliers, clients, freelancers, designers, and so on, right? Speaking about the gaming industry, right, those people who play Dota, Counter-Strike, and so on, they want to sell some these swords from the World of Warcraft, right? They need to allow the people from Canada to sell the sword to the person from Indonesia.
Yes.
Sending money from Canada to Indonesia is challenging. With the crypto, it's instant, it's quickly, and you can hedge the price fluctuations instantly. There is a demand.
I see. Our time for the coffee break is almost over, but I think I would like to ask one more question. As you, let's say you put your foot down in Estonia, in the most expensive area in Tallinn center, Porto Franco, having a 700 square meter office. So that shows your focus and your seriousness about European market. Can you reveal us what would be the next approach, or what would you will provide for Europe, or what you would like to conquer from Europe with CoinsPaid?
I don't want to spoil some of the future releases of our plans, right? So let's have this answer limited to Europe at the moment. New things are coming very soon from us. Estonia is the leader for crypto regulation in Europe, in my opinion. In order to work in Europe, and we mostly operate in Europe, we need to be established here in Estonia. Estonia is a small nation, very proud, and very sort of close to the foreigners, right? I am a foreigner here. So in order to show to the local community and local ecosystem that we are serious about the country, we are planning a set of activities, right? One of the activities is we are investing into the economy by spending the money here, spending the tax here, right? We're investing into the economy by having an office, right? We order supplies all locally, right? We deal with the local the catering services, right? The organizers of the event are all local, right? So we're doing a contribution into a local ecosystem. Hiring in Estonia is not always easy. Relocating of the people here also not very easy, right? the contribution would be higher, right? If we were able to move some of the existing employees here, they would become a tax residence here, right? And we can contribute even more, right? So those are the things that we show to the community, right? That we are here and we are seriously here, right? We are not just a group of people who just, I don't know, exploiting, right, the regime here. So we say that we are serious about Estonia, we respect the local rules, we respect the local community, and we really would like to help in the ways we can. There would be a few more things, right, that we'll be announcing how we can be integrated in the local ecosystem even more. But speaking about the big plan is to make sure that we manage to comply with Estonian views how cryptocurrency operators, the CASPs, should live, right? Then being converted to the MiCA compliant one also through Estonia and doing passportization of this license also from Estonia, right? And in order to achieve all this, we would like to really be present here, not just having the name on the door or on the mailbox. If the regulator is willing to speak with us, if anyone would like to have a business meeting or entrepreneur would like, I don't know, to have a presentation, the doors are open. They can schedule the time, be here, and do whatever basically they want to discuss with us or with their friends or so on.
I see. I thank you for this very fast 20 minutes, actually.
No, it was amazing.
It's a pleasure to interview you because I didn't need to do anything. You are so good speaker. So thank you. And
thank you very much, Raido.
Now we are going to continue.
With the official part.
Yes, thank you.
Thank you very much. Pleasure.
I'm sure those of you online enjoyed that session between Raido Saar and CoinsPaid CEO Max Krupyshev as they were going down memory lane of how it all started. If you just joined us online, or maybe you were a little bit late to this venue, this is MiCA entering into force, a conference that has brought together stakeholders to look at the various ways that this EU regulation will impact the cryptocurrency sector. My name is Solace-Rose Quartey, and I am your moderator for this event. Let's dive straight into our next presentation. Before that, I would like to remind you that if you want to ask questions, to any of the presenters for this event, kindly do that by scanning the QR code on the screen. Join slido.com, the hashtag 1907973, and you will be able to pose any question, and I will try my best once again to ask our presenters. Now, when it comes to countries which have mastered the art of regulatory preparation, implementation, and assessment at various levels, one country is at the fore, and that is Norway. Established in 2005 and improved upon over the years, the country drew up the instructions for official studies reports, which sets the requirements and guidance on the preparation of regulatory proposals, assessment of its consequences, stakeholder consultations, etc. In trying to implement the new regulation MiCA, we cannot lose sight of the fact that we don't necessarily have to reinvent the wheel. We can simply tap into the existing knowledge and expertise of those who are very good at implementing regulations at various levels. And so for this presentation, I'd like to introduce Magnus Jones from the Nordic Blockchain and Innovative Lead at EY Tax and Law. He is the lead, and we'll be talking about lessons learned from the Norwegian experience on how to implement new regulations. Hello, Magnus, and thank you very much for joining us online. If you can hear me loud and clear, the floor is yours.
Thank you, and thank you for the kind invite to this. I so much wish I could be there due to some personal circumstances. Unfortunately, I cannot be there, but I had a great dinner yesterday with some of you. So I'm also sending my great congrats to CoinsPaid, the new office, and the business they're running. I'm much looking forward to follow it all. When it comes to Norway, that's sort of the little different country. Norway is not a member of the EU. We're a member of the EEA, the European Economic Area. But before we dig into that part, I think it's relevant to look into some fun facts around where Norway is when it comes to crypto. And in Norway, we have our annual survey that we carry out together with a company called K33 Research at EY. And last year, we found that it's 10% of the adult population in Norway who has crypto assets, i.e. persons of the age about 16 years old. So Norway is actually on the forefront compared to several other European countries when it comes to the ownership rate of crypto assets. In addition, a fun fact is also that more Norwegians has, for the age population 39 years or younger, there's more people who has crypto assets compared to ordinary stocks and shares. It's 330,000 people estimately who has crypto assets, while only 198,000 who has shares. And that puts also things there in a perspective that we need to follow this one close and thoughtful in terms of how we frame this landscape of what we are discussing today and what we will be discussing at the panel later. So right now in Norway, the current framework is that we don't have any specific crypto laws by nature. We have implemented naturally the anti-money laundering, counterterrorism framework around crypto exchanges. So if you are to run an exchange in Norway, you have to register with the financial authorities. That means that you don't have a license, but you register, and the financial authorities, they go thoroughly through your AML requirements, setups, and measurements to ensure that you are just as compliant as any other financial institution. And I will get back to also how Norway is dealing with this in practice, because there's several ways to adapt and adjust to our legislation or to our proposed framework legislation. But in the way that Norway is going to deal with MiCA per se, when or if it enters into action, we have heard it's been postponed many times. And just today, I can break the news that MiCA is going to be postponed one more time. I might scare you now, so I'll rather break the news. It's only by one day, luckily, this time. So we might look into the final vote on Thursday instead of Wednesday. But this gives the perspective that there's still lots of uncertainty. But right now, it seems like it was only one small amendment that came in place today, and that's it. So hopefully we will have something by next week, which is a little bit more concrete. And if that is being voted on next week, then Norway will have to implement this one in a slightly different way, as said, because we are not a member of the European Union. We are a member of the EEA, and also then we have to adopt together with the other EFTA countries, Iceland and Liechtenstein. And that means that in order to get the regulation into the Norwegian law, we have to also update our laws. So we have to negotiate together on the text together with Liechtenstein and Iceland. And that process we don't have control over ourselves. That might take some time. Normally, it doesn't take too much time, but we look into, I would say, a process in Norway from, if we take the presentation that MiCA will enter into force from the, say, 1st of January 2024, then I presume we will at least spend 1 year before we have it formally in place in our legislation in Norway with updated laws and everything. Most likely sometime between 1 to 2 years in between before we are following the rest of the EU from the perspective of a legal view. However, our experience is that all the actors who is in Norway now, regardless of you are an exchange or you are dealing within the crypto industry in general, i.e. considered as a VASP or a CASP, a virtual asset service provider, all of these parties are adapting to this one and adjusting their activity and acting as if the proposal for MiCA is already in place and acting compliant. So from the Norwegian view, I don't see it as a challenge per se, that it might be a lack compared to rest of the EU. And I think in that perspective, what I was going to come back to, and that's how Norway has been dealing with crypto assets in general up until now, because we haven't had any laws or framework as said. And that's down to that financial authorities, they have been a little bit withholding because they are in a position where they are saying, hey, we have to wait anyway for the EU. We do not want to reinvent the wheel or come up with, call it a bad, a difficult, wrong decision on some area that we might have to change and adapt to within a couple of years anyway. So they have been more or less sitting still. But like it was mentioned here, the industry is growing. So it's not only, call it far right-sided anarchists who is leading and building this landscape. It's also large companies like Nike, Adidas, Louis Vuitton, whatnot it might be. And when these parties comes also up to the financial authorities, they have to then naturally act in a different way. So it has been a natural evolvement there. But the leading role that is really world leading, and that's the tax authorities in Norway. And not many people knows that Norwegian tax authorities, they started clustering, tracing cryptocurrencies already back in 2012. So Norway has been front running and leading this one. And also from how they are dealing with the landscape of us as advisors or from people who is in the industry. It means that the crypto task force group that they have established, they are responsive. They go in. I can schedule normally a meeting with them only within 1 to 2 days. The longest time I waited to have a meeting with them is 1 week. And the reason for why they are responsive is because they understand something that unfortunately the majority of European politicians doesn't understand, that this landscape is not written in stone. It is not fully developed. It's not something that we can draw down to specific terms in terms of NFT. What is the classification of an NFT? An NFT is not equal to another NFT. There's so many different variations of it. What is DeFi? What is the definition of DeFi? What do we put into this one? All of these specific terms and pronouncements around these ones, they have looked away from. They understand when we come in with clients that we come up with something new. This landscape is naturally evolving. There's something new popping up each day. And by that, they are also learning from it. That's why they want to be responsive. They do not want to be there to put us into a paper pile and say, hey, guys, you have to wait for 12 months now for us to come back because this is so difficult for us because we have to look into it. Instead, they pick up the dialogue. They take the dialogue. We meet together with their legal lawyers from the government side. We act as lawyers there also. So we can discuss everything from the practicality towards the technical setups, towards the legal and also the tax surrounding it. So from that perspective, we have been able in Norway to have a more certain degree of certainty around this one compared to other countries where you have to spend months or even years to just hear back from the authority. So my message in this matter is that I urge that, and I think we will discuss this one further in the roundtable as well, but that we have more, call it technology neutral frameworks and laws surrounding the landscape compared to being too specific, which MiCA to some degrees are, and where we will see challenges and where it can be, call it outdated before it actually even enters into space. So this is one of the areas where we clearly see that if governments, I think, need to start to delegate fund and resources. So hence, we cannot throw the blame on the tax authorities themselves per se, because they have to just do whatever the Ministry of Finance says. So the message here is rather also, which we have had good learning experiences from, and also great takeaways, is that we have been able to now double the resources of the Crypto Task Force group here in Norway. The Minister of Finance understands that this technology, which surrounds lots of different elements, is not going away overnight. It has come here to stay in one way or the other. You can like it, ignore it, or be indifferent. And the volatility will be here for an infinite time also. But it has come to stay. And thereby we have to adapt towards this one and understand that the landscape is evolving. And by that, we also need a close cooperation together with the industry to learn, to understand, to see. And sometimes they need to go back and say, hey, we might be too quick, but still be responsive and learn from it. So by that, I think I will leave that one. And I'm much looking forward to discuss further of these statements and surroundings also in the roundtable to see how MiCA will be fit into action in practice.
Thank you very much, Magnus. Before you leave, a few questions for you. Now, first of all, do you see traditional financing firms, for instance, like Mastercard, at some point starting acquisitions of VASP? And what could be the reasons for such course of action?
Yes, as Mastercard said themselves, they acquired CipherTrace, for example, as just one example. So clearly, definitely, we see it ourselves from the M&A team here as well, that we have more and more companies who is in this sphere. So that's a natural way. But I also see that a public known case of a Norwegian exchange called Norwegian Block Exchange, which we assist, they want to become a full-blooded bank, a crypto bank. So they are working on a strategy to then apply for an ordinary banking license. We have assisted them towards receiving an e-money license now. So I think in terms of the, call it the acquisitions, we will also see it from the other side that crypto companies are starting to become financial actors and not vice versa. It's a shorter way from that side compared to the other one, also to get the grants and the confirmations from the board who actually has to accept and also understand the risks surrounded by this one.
Okay. One more just before you go. Now, you talked about Norway and how it would look at implementing MiCA by obviously taking a look at EFTA's position on this. And how do you think some challenge, or what are some of the challenges that might pop up for the implementation of MiCA at the EU level?
From the Norwegian side or in general at the EU?
In general, from the EU level, from where you stand, your perspective on that.
Well, I think it's way too many things there that we can summarize it in just a few seconds, and I think we will touch upon that in the round table. So I'll leave it hanging there for us as a teaser.
All right, thank you very much, Magnus Jones. A round of applause, please. Magnus Jones is a Nordic blockchain and innovation lead at EY Tax and Law. It's now time for the next presentation, and let's turn our attentions to the Baltic area. Now, first, Lithuania, which boasts of the most expansive fintech ecosystem across the region, with a number reaching over 260 as at 2022. Now, in this session, our facilitators will address these questions. How are Lithuanian fintech companies anticipating MiCA? Are the Baltic countries playing as a team on this topic? Ladies and gentlemen, please welcome Alexandra Pinot, co-founder, head of innovation and strategy at Amelize, and Ondrej Sonaite, head of regulatory compliance at Nuvei. A round of applause.
So we're just two, we can take all the space. Hi everybody. Thanks a lot to CoinsPaid for having us today. It's really nice to be there. I've spent way too much time these last 3 weeks in Tallinn, so it feels like my second home somehow. I think it will be good for us to start with a bit of context and background as to what has been happening in the Baltics regarding VASP and the relationship with fintechs. We've heard a lot already during the previous presentation and discussion as to the evolution of the regulatory framework in the Baltics. And I think from our end in Lithuania, what has been happening in Estonia has been great. Not that we like to rejoice out of the misfortune of others, but seeing the evolution of first Estonia being pretty much one of the first country, if not the first country in Europe, to have a formal regulatory framework for VASP, to becoming the MiCA of virtual asset service provider in Europe, and then this huge backlash. I remember when Matis Macker and the Estonian FIU pretty much openly announced the cleansing of the ecosystem. I remember the reaction in the Baltics and in Lithuania, and I think we all remember the consequences very quickly after, which practically was hundreds of virtual asset service providers going from Estonia to Lithuania, where at that time we pretty much had no framework at all. At that time, so we're talking what, 2 years? 2 years ago. I think we had less than 50 virtual asset service providers registered. They were very calm. The volume of transaction was very low, so the ecosystem was pretty much inexistent. In the matter of 6 to 8 months after the new very strict regulatory framework that was enforced in Estonia, we've got hundreds, up to almost 800, I guess.
800.
So imagine, the ecosystem was basically multiplied by more than 10 in a matter of few months. With the FIU capacity, the FIU is still supervising virtual asset service provider in Lithuania. The FIU capacity pretty much not changing, so no experience, no staff, and a huge ecosystem coming. So from the point of view of Lithuania, and the point of view of Lithuania being one of the fintech hub in Europe for licensed fintech outside of the crypto ecosystem, it was a bit scary, I will say, to say the least. But I guess we've got a very good set of learnings and lessons from what happened in Estonia as to what to do before MiCA happens. A lot of countries across Europe were wondering, and actually still wondering, what to do before MiCA enters into force. A lot of the approach of jurisdiction across Europe are, MiCA is coming, why would we bother drafting a specific regulation when we will have to change it in a few years? Now Lithuania, in my opinion, definitely made the right step forward and decided to regulate afterward. We see it now. MiCA has been postponed. We still don't know exactly when it will be enforced. And this has been something very much needed to address the risk we were facing super fast. So the regulatory requirement changed drastically as well in Lithuania very recently. But I guess you can tell us more.
Yeah, I can tell a bit more about what has changed. So as Alexander mentioned, actually there was in a way huge risks. How many participants are coming to Lithuania to get the license or this registration in a way, and it was registered, but then 800. So at 1st of November 2022, there was a change in the EML law, and WASPs become obliged entities. And as a result of that, there was additional requirements put in place. So first, the capital requirement, instead of having 2,500 of initial capital, it was increased up to 125,000. As well as strict requirements to identify the client and beneficial owners. And generally speaking, what happened? So after these requirements came into force, having 800, actually the registered entities were left at 200 only, because others were not compliant with the new requirements in place. So additionally, there was some FOU investigations, and now we had some findings, and we see that not all WASPs are compliant with regulations. We are not providing information to FOU. One of them is regarding the transactions that are more than 1,500 euros, so we need to report on that. This was one of the findings. As well, there was a bigger investigation of 12 or up to 15 crypto entities or WASPs in Lithuania. No findings yet from these inspections, but let's see what FOU actually have done and what would be the findings. And additionally, just to mention, so with this new regulation in place, the scope of the service that you can provide was limited, because you cannot be registered in Lithuania and provide services elsewhere, and Lithuania should be the main point of provision of services. So what WASPs began to do is to register in all other European Union countries. And it's actually a huge process, because it can take a different timelines in the different countries, even months, and different rules apply in this licensing process. And so if you have not started yet as a WASP to actually register, you may lose this big portion of clients, because you will not be competitive in a geographical space.
This provision of services in the European Union is a bit of a mess, to be honest, and it reminds me the early stage of fintech, so electronic money institution, payment institution, specialized banks, when it came to operating outside of the country where they were registered. So at the moment, we now know better that if you obtain a registration or a license in a country in Europe, indeed formally, you cannot offer your services to citizens of another country. Now, practically, we see that it's not happening like that. And there is this gray area where if you don't proactively advertise your services outside of the country where you operate, you can pretty much operate if you're not too loud as to what you're doing. So we see that happening in Lithuania a lot, and in other countries, I'm sure as well. Now, I guess, and you mentioned the FIU supervision, the result of the FIU supervision. That is true. We don't have public findings yet, but we can see some interesting trends. I'm lucky enough to work with the former deputy head of the Lithuanian FIU, which is still in charge of supervising the virtual asset service provider. And basically, the trends that we see is indeed the lack of reporting. In Lithuania, there is this requirement, which is indeed to report any transaction above 15,000 euro aggregated, which is the same as for cash transaction. It might be a bit weird, but it's the way it is. We see there is a lack of this type of reporting. And there is also a kind of biased understanding of transaction monitoring. And to me, that's super interesting. I'm biased, obviously, myself about that, but it's still very interesting because we see that a lot of virtual asset service providers self-satisfy themselves with blockchain analytics tools. We've named a few before. You probably know them all. This is indeed super efficient, and this tool works super well. But we should not forget that this is only about scoring the transaction and basically monitoring the on-chain activity. And this doesn't help virtual asset service providers, especially those which are dealing in fiat as well, to monitor their transaction on the blockchain with the regular patterns, but also outside of the blockchain for anything which is fiat to crypto and crypto to fiat. And that was one of the findings of the FIU. Also, and on top of that, and I think that's why we're here ultimately, the relationship with licensed financial institutions and fintechs, since we have this huge flux of virtual asset service providers which have come to Lithuania, which was already huge in terms of fintech operation, is increasing a lot. So basically, we have our electronic money institution, PI, specialized bank, once again, which are working much more with these guys. And this is growing substantially. And I think this is a huge opportunity for Lithuania, but pretty much for any country in Europe, to take over this opportunity. For me, when the Silicon Valley Bank scandal happened, as well as the other one, it rings another bell as to the opportunity of fintech to take over the banking for the crypto ecosystem. And that's, in my opinion, for different reasons. The first one, we've been talking about the reserve, liquidity, and segregation problem in the banking area. People tend to forget that in the fintech ecosystem, when it comes to safeguarding and capital requirements, the requirements and the obligation are much stricter than when it comes to banks. So basically, if you're a crypto company, well, first, if you go and knock at your local bank, they will probably tell you to piss off first. And second, they probably don't understand what you are doing because they took the party of putting that aside. But when you go to your local fintech, and that is true in Lithuania, but also in many countries across Europe, they start to have this understanding of what crypto is because they're used to work with the outsider, which crypto still are. And on top of that, they have capital requirements, which are pretty much one-on-one. So we talked about credibility, about adoption, and I think this interaction between licensed fintechs and crypto and virtual asset service provider is very much a huge opportunity and the future to create credibility, to reinforce the trust of the end user, and that's something we're not using enough. And we're starting to see that a lot in Lithuania.
Yeah, so I would like to add to that. So at Nuvi, we are opening accounts to businesses, but as well, we are opening accounts to businesses that are related to crypto assets and some examples, so virtual currency exchanges, virtual currency liquidity platforms. And what we see from Bank Lithuania, we are not really happy to have any connection with crypto entities. So this is a huge risk for them. So in our case, we are comfortable because we have a good knowledge what these companies are doing, what are their reputational status and so on. But I heard in the market that some other market participants, we want to provide this service, and we got the response from Bank Lithuania that it's too huge of a risk. You need to be more mature. You cannot onboard such entities. So it's a huge opportunity in the future if you have efficient controls and checks in place, and you are able to actually understand the crypto-related businesses model, you could onboard them. But still, Bank Lithuania approach is that you should differentiate yourself from any crypto-related businesses. So still is bad, but let's see, maybe MiCA will change that approach.
I think it's super interesting here because, we've approached the situation of Lithuania and the openness of Estonia, and the openness of the Estonian FIU. And there is something I love in Estonia. it's this possibility indeed to exchange between the FIU and the stakeholders and the participants, the market participants, when it comes to virtual asset service provision. In Lithuania, that's very much true for fintech, and it took some time. So that's why it reminds me the early days of fintech. It took a lot of time to establish this trust between the regulator, the supervisor, and the market participant. And unfortunately for crypto, we still have this kind of schizophrenia. Crypto is now regulated. We have a regulatory framework which is pretty clear in Lithuania. We have a fintech framework which is pretty clear. Crypto company can do business with licensed fintech, but we still don't have any regulatory guidance as to the best way to enable and to encourage this business to happen safely. So that's a pity because indeed, when you look at the result of supervisory inspection, when you talk to the market participant, I mean the fintech market participant, you really hear the fact that they lack guidance to operate with virtual asset service provider. And hopefully, MiCA indeed will be changing that in the near future. Yeah. Maybe one other point as well, because it's a question which is being asked in many countries, including, I understand, in Estonia. We still don't know in Lithuania who is going to take over the supervision of virtual asset service provider. So at the moment, the supervision is under the financial intelligence unit. They are gaining the competence, they are reinforcing their staff, but logically this should go to the Bank of Lithuania. And the Bank of Lithuania is still not openly or proactively going forward and basically leading this approach. So that's a bit of a pity for now.
We could make an assumption, I believe, that it will end up with Bank of Lithuania, because recently we posted a job ad saying that we are looking for supervisory officer of crypto markets. So let's see, maybe this is one of an indication that it will end up with Bank of Lithuania, because we have more resources, more knowledge, and doing all these inspections of fintechs and related businesses what we are serving. So it would be a logical decision, I would say.
Yes, and we still don't have clarity neither, and I think that's where we can see that you guys in Estonia are slightly more advanced, I mean much more advanced when it comes to crypto than Lithuania at this stage. We don't have clarity as to the status of registered VISP in Lithuania after MiCA. So what will happen from the moment MiCA is implemented to the hundreds of virtual asset service providers which are registered? Will there be a grace or buffering period for these guys to upgrade their registration slash license? Will it completely change the framework? Again, who will supervise? This is still very much of a gray area, and I think we don't realize that it is just, I mean, it's just around the corner. It's a matter of a few years, but when you look at how complicated the implementation is, I think this is a question we should definitely ask ourselves right now.
Yeah, I completely agree. And after MiCA, hopefully this approach from the regulator side will change, and from investor side, that we will have more assurance of crypto industry, and in a way this would help to actually get recommendations how for fintechs to onboard SAPs now, how we call them. So maybe there will be a clear framework how to do that, because currently, still, if you see that all the controls are in place, we are registered somewhere, still there is uncertainty whether this business is legal or not, or we compliant with all the rules and EML and so on. So let's see. Hopefully this will bring more trust.
Also, I wanted to quickly draft a parallel with what we've mentioned before, and how Moneyval evaluation impacted the approach of the Estonian authorities. For those of you who are working with Lithuania, with Lithuanian fintech, you may have noticed that in the last few months, the approach of the regulator has changed and has become more stringent, to say the least. We are also going to have in Lithuania a Moneyval review, which is planned for last year. And well, pretty much like any country, everybody fears the possibility of being relisted. So the approach is now very much conservative. Now, this being said, and when it comes to financial services provision, trust and clarity is always something that helps a lot. I think the clarity brought through MiCA for financial institutions, for virtual asset service provider, and for the interaction between both will help a lot to ease everybody's concern, including, I hope, commercial banks, the larger banks. Now again, and that's really one of the message, I guess, from me representing the FinTech Hub Association in Lithuania, we can see that a lot more fintechs in Lithuania are gaining the knowledge, expertise, internal control, risk management framework to be able to deal with crypto. So practically that means knowing how to onboard crypto, knowing how to manage the business relationship with crypto, understanding the risk of crypto, and obviously putting together a set of mitigation measures to establish sustainable relationships. So I really think here is an opportunity which will only be growing. I find it sad for banks to miss this opportunity, but they may change their approach later. But I really think we have a very bright future ahead, and on that I very much agree with Max indeed as to the result of MiCA and why we should see that as an opportunity rather than something that is going to brought chaos on the market.
Yeah, I agree. I believe that from MiCA we will benefit because passporting as well to be able to have a growth in the European Union. Still, we should not forget that even if there is this passporting, in some countries there are on top additional requirements, even if you provide services on freedom of services basis. So we should be very careful and look into those requirements if we are going to use as VASPs these provisions of passporting.
Thanks. I think we're over with the time, but I think we also have some time for questions, if there are any.
All right, since you're still here, so after MiCA is passed, right, do you think that less companies will try to get licenses in Lithuania as the rules will now be the same across Europe?
So I could start, yeah?
Yeah, go ahead, yeah.
I believe that still Lithuania being a fintech hub, it may attract the financial market participants to come to Lithuania and to get licensed there, because it has, and I believe hopefully we will remain this position in the globe, that we have this faster and licensing process. So let's see what the future will bring, but hopefully we will manage this position.
I very much agree with that, and I agree with previous speakers who mentioned the fact that in Estonia, the licensing process being so hard at the moment and so stringent, it will only be a piece of cake to basically meet the standard of MiCA, and I think it's pretty much the same in Lithuania. We have much less strict standards, but we have an ecosystem which is so practical that ultimately I think this company will stay in Lithuania. And I will give a very practical example of that. If you're a VSP registered in Lithuania, let's say you are in Vilnius, if you want to open an account, if you want to find people for your compliance team, if you want to have to work with a tech infrastructure company that is going to provide you the framework to basically establish your exchange, for example, you can do that in the matter of 3 hours within the center of Vilnius. You have many companies doing that. You have a lot of talents now, and you have many companies which are open to that. So I think that we will keep it. We will struggle much more than Estonia I guess, into meeting the new requirements and be at par with MiCA, but we still will have this synergy, which I guess will remain an asset.
Okay, thank you very much. You still have to remain on the stage because you're part of the panel for the roundtable discussion, and that is the session. That's the final session, and this is basically bringing it now down to Estonia. We just took a look at the Lithuanian perspective. Now, this session consists of 8 different participants, and I'm going to name them. And whilst I name them, could you please come up on stage and join them here? So Thomas Arvat, the Deputy Head of the Financial Services Policy Department at the Ministry of Finance. Round of applause. Seat.
Hi.
Hello.
Okay. We're also joined online by Mari-Liis Cook. She's the Head of Innovation Department at the Estonian Financial Supervision and Resolution Authority. Mari-Liis, thank you very much for joining us. And you've already been introduced to Raido Saar, is the president of the Estonian Web3 Chamber. A round of applause, please.
Hey.
I'd like to invite on stage senior advisor at the EU, Regulation Mastercard, EU Regulation at Mastercard, Christoph Baert. All right, then. And of course, we already have on stage Alexandra Pinot, who's the board member of the Fintech Hub Lithuania and the co-chair of the ACAMS Baltics chapter. Round of applause again. And Ondrej KOVARIK, head of regulatory compliance at Norway. Magnus Jones also joins us online again. He is the lead at EY, Nordic Blockchain and Innovation. Round of applause. And as you can see, are you comfortable?
All good, thanks.
Great. So, yeah, and that's how dedicated she is to the cause. With a broken ankle and a broken leg, she still decided to still be here today, and that shows the dedication and the passion that she has for this sector. I'd like you to meet Maria Akulenko, the head of legal and compliance at CoinsPaid. A round of applause.
Hi.
And she'll also be the moderator for the roundtable session. So I'm going to hand it over to her. Maria Akulenko, over to you.
Yes, thank you very much for the warm welcome. And, well, basically following the fantastic information that the audience has heard on the lessons, experience, and plans of Norway and Lithuania, now we are moving to the CoinsPaid's homeland, Estonia. I would say that Estonia was one of the first European countries to start regulating the sector. I believe it dates back to 2017. And basically, this was one of the reasons we decided to launch our business here. So as of today, the Estonian framework for virtual asset service providers is considered quite comprehensive and robust, very elaborate, thoughtful, I would say even forward-thinking. But of course, MiCA would influence this as well with the adoption. And while we are in Estonia in a pretty good stage already, we all anticipate this upcoming changes. So I would like you all to join me in today's discussion on the Estonians' view of implementing the MiCA standard. And first, let's welcome our guest, Mr. Thomas, Deputy Head of the Financial Services Policy Department with Ministry of Finance. I believe this is a very correct person to whom we should address the question on the anticipated changes in Estonia.
Hello. It's great to be here. Actually, I have also one of the slides to show you. Well, yeah, in Ministry of Finance, I'm one of the persons who is involved in preparing the draft act which will going to implement MiCA in Estonia. But this slide, I can see it in here also, but or no? Or
I believe we had your slides, and my colleague should show them on screen.
It's on.
Okay,
yeah, it's there.
Yeah, this is the right one. Yeah. So actually, this is kind of the picture of 5 steps in Estonia, how we are going to implement MiCA in Estonia. But before I'm going to jump concretely in this slide or in the timetable, what we are planning to choose, and I'm going to briefly say something about substance of this draft act. Actually, in the previous panel, it was already touched the issue who will going to be the supervisor according to MiCA. So in ministry, at the moment, we have decided that the supervisor authority will be Estonian Financial Supervision Authority. So there will be a change in supervision authority. And the reason or rationale behind this, actually there are 3 basic reasons. If you look at the text of MiCA, it's pretty similar with MiFID directive and regulation in Europe. And MiFID is very much related with investor protection, and so as MiCA. MiCA is very much related with investor protection and less related with anti-money laundering. So this is the first reason. Second reason is actually credit institutions and e-money institutions are the only ones who can issue e-money tokens, and already today our FSA is a supervisor authority of those institutions. And thirdly, MiCA includes several provisions which foresee that the designated authority should cooperate with European Banking Authority and the European Authority of Financial Markets. And today our FSA is the main body who is making supervision with those authorities. So this is a rationale behind why we have chose this way. But regarding the timetable, what we have right now in this slide, we will hope that the first draft act will be published in June this year. According to the Estonian legal system, there should be at least 2 consultation rounds, and we hope that we're going to have a second consultation round in autumn. So basically, we are also thinking that there will be a kind of roundtable with all the stakeholders, but it rather going to be in the end of summer. We want to give you a necessary time to look at the draft act and get your feelings and impressions of this draft act. And after that, we can discuss more deeply if we are going to in the right directions. So sorry, we may ruin some people's summer vacation, but that's the situation right now. What we have, and regarding the adoption of the new law, we will hope that we are able to submit the draft to the government in the end of this year, and our parliament will be able to adopt a new law in the beginning of next year. This is point 2 in here in this slide. To move on, the point 3 in this slide is first practical issue. We will foresee that the stablecoins issuers will be able to submit their license application to our FSA in June on next year or July. It depends really when exactly the MiCA text will be published in official journal in EU, but more likely it will be next year, June or July, when stablecoin issuers are able to submit their license application to our FSA. But it depends how many those kind of stakeholders we have in here in Estonia or in any other part of Europe who want to or who want to get the license from here, from Estonian FSA. To move on, the point 4 in here, I think maybe it's more practical and it's very heavily related to virtual asset service providers who for the moment have the license from FIU. So it's going to change, and for the moment we will have a plan that they will be able to submit a license application to our FSA in next year on November. So this is the first time or the first date when they will get the possibility to submit a license application. And what is still open issue is point 5 in here. When will be the exact date when the licenses issued by FIU will be repealed? MiCA provides an kind of extension or grace period for those service providers who are operating right now. If I'm correct, then the grace period will last until 2026 or in the middle of 2026. Those licenses will be repealed, or those service providers who are operating right now should be in the line of the MiCA provisions at that date. I mean 2026, in the middle of that year. But member state has an option to reduce the date, and most likely it will be reduced in Estonia. So licenses which are for the moment issued by FIU will be repealed, I believe, in the middle of 2025, or at least in the end of 2025. But still, this is an open issue, what we have on the table right now. So I think for the introduction, it's all from my side right now. And I have to say that we have a new finance minister. Actually, officially, he will be appointed in its position on next Monday. So I haven't had time to discuss this plan with him. So I don't know if he's happy with this plan or not, but I hope he will be happy, and he will also agree what we are planning to do in Ministry of Finance, because we had he need to sign this draft act in June if we want to publish it on our website. Okay.
Thank you, Thomas, a lot for sharing this Ministry of Finance insights on the implementing of MiCA in Estonia. I believe we just heard the most fresh news that anyone could hear about. If I may just follow up on the grace period and this transition from the FIU to the FSA, do you expect, if of course you can disclose or comment in any way on this topic, any kinds of more preferential treatment of the existing WASPs, or all applications would be brand new regardless of previous experience in the business?
Yeah, it's quite valid question, and unfortunately, I cannot give you any final answer in this respect. But actually, it pretty much depend on our FSA, because our FSA has a discretion to decide how the previous or how the operators or the virtual currency service providers who has a license from FIU, can there be some kind of trade-off or no? It's up to our FSA to decide. Actually, in the text of MiCA, there are strict provisions that financial supervision authorities should cooperate with FIUs. So at least they should make some kind of cooperation, but it's hard to say, does it make it easier for those service providers who have already the license today to get the new license from our FSA? It's for the moment, it's hard to say, yeah.
Mm-hmm. Thank you. Your perspective has, I believe, give a very valuable dimension for the start of this discussion. And with this in mind, I would like to address my next question to Mari-Liis, who is responsible for Innovations Department and the Estonian Financial Supervision and Resolution Authority. We are very curious to hear about your thoughts on how you anticipate MiCA will influence your work, maybe what challenges you foresee from the supervision perspective. In general, do you think implementing MiCA will help your work in any way?
Hello to everyone, and thank you for having me. I will start by saying that overall, of course, I consider MiCA to be a positive development for the sector, as it provides everyone with a common framework, also the common rules for approaching crypto assets. And then, as with any new regulation, it always also brings challenges. And I personally think that MiCA brings some quite unique ones at that. And maybe before I go on, although Thomas said the supervisor is going to be the FSA, since the implementing regulation is not yet official, then my views today should not be considered an official FSA opinion, but instead I can point out some ups and downs that I think supervisors in general can see in MiCA. And to help with that, I also have actually constructed one lovely MiCA burger. If I may have my slide now, please.
Yes, we are solving this technical difficulty right now, because the slide is amazing. I have seen it.
Okay.
Yes, it's on screen now.
No, I will just go through some pros and cons. To just start off, then MiCA gives us the bonds, and that is the scope and the definition that actually, packages all of the contents of into this one nice multi-layer product that is generally quite easily edible. Although sometimes, it may spill contents on your shirt a little. So one of the challenges here is that right now the bonds are actually not yet cooked through. That is, the current MiCA text does not really give full details on what exactly falls under its definitions and scope. And this will have to be clarified with upcoming so-called level 2 and level 3 work, which can last all the way into 2025. For example, MiCA says that financial instruments will not fall under its scope, but since national laws take slightly different approaches to what is considered a financial instrument, then for the purpose of MiCA, there will have to be an EU-wide agreement on this. And the same actually goes for decentralization, as MiCA doesn't cover fully decentralized businesses. But we do not yet know where the line between this centralized and decentralized will be. Then to move on, regarding the contents in between, I think what we see for so-called stable coins or ARS and e-money tokens in MiCA lingo, it is quite formidable and helpful. Right now, we have the e-money directive for e-money tokens already, but e-money on blockchain has some very, practical issues that the e-money directive does not cover. So I think it is good to have this bespoke regulation here, and it is quite the same for arts, as I think in practical supervision terms, this is one area where it has thus far been very tricky to really say whether we are talking about a fund, some MiFID instrument, or something else altogether. And MiCA will definitely help make this clearer. And I think the issue here will rather be whether MiCA would be quite restrictive and make certain very popular stablecoins unavailable in the EU altogether. Then those non-stablecoin crypto assets, for me personally, seem like where things could go terribly wrong the most, especially in Estonia. Basically, MiCA just sets out a requirement to publish white papers here disclosing certain details, but all that supervisors can really do is basically stop the offering if they feel there is something wrong with it. There is no pre-approval process and no real expectation for supervisors to go through all of the offerings. So basically, it only protects investors by giving them information for which the offerer is liable. But then in Estonia, we of course have e-residency, which means that we may become this so-called gateway for non-stable coins to enter the European market. And I think there could be a reputation risk there that we should all fear a little, and if possible, also do something to prevent it. And finally, regarding CASPs, I think the good bit is that the rules are somewhat similar to MiFID, but the bad bit is that it is not MiFID. So the levels of client protection are somewhat lower, and it is important for customers to understand that. And maybe to just wrap it up, I know I've been talking for a quite long time now. I think that also market abuse will be quite an interesting challenge. We are now talking about a very global market that is open 24/7 and has plenty of data flowing around everywhere. And I think it doesn't take a genius to understand that market abuse supervision in these circumstances cannot be very manual, and will need quite advanced data analytics tools instead. But of course, that will require a lot of resources and also new skills. And I could spend another 30 minutes talking about how challenging it will be for supervisors all over the world to basically compete for the skills. But I rather think the keyword here will have to be international cooperation instead. And I will finish here.
Thank you a lot for these insights. Indeed, MiCA definitely has the potential to provide a more secure, consumer-protected environment for crypto adoption, and this would increase the overall confidence of people in crypto. However, on the other hand, some argue that overly restrictive regulation could hinder innovations in the industry and hinder the growth of the crypto industry. So given the potential benefits, challenges, and that were just raised by Mary-Lise and possible drawbacks of MiCA, I would love to hear the panelists' opinion on the impact of MiCA on consumers, business, and maybe overall economy of Estonia.
I would say that Estonia has, as many have been mentioning today already, that Estonia has been a couple of steps ahead of MiCA. Most of the Europe is conveniently waiting what's going to happen. Estonia was brave enough to jump into the dark waters. We got burned. We got out of this dark water. We cleaned ourselves up, and now we're actually ready to swim in a nice pool. Others are just touching the water. So we have already been there. For Estonia, in many parts, MiCA can even deliver some kind of relief, theoretically, not practically, in a way that if we are comparing the minimum required capital by MiCA or by Estonian AML Act today, then the limit is up to 150, but this is minimum required capital. In real life, it comes back to your transaction value, which makes you anyway have to deposit enough money to cover your turnover, so to diminish your risks. So for Estonia, it's not a very big risk, but for Estonia, the impact for the industry probably will be if those current licenses will expire in 2026. So I'm not very optimistic that we can do anything about it, but we will certainly speak with Thomas and the Ministry and FSA and FIU, the logical possibility what our current on-stepping government has promised, that documents and information to the government supposed to present one time only. So from our perspective, from cryptocurrency service providers' perspective, who have been dealing since 2019 with producing papers, because 19 there was a change in AML Act, and next one we raised the capital, new requirements. Every step made us cleaner from this dirty water I was speaking about earlier. But now, today, I think those companies who will remain in the market, who are able to remain in the market, they have been gone through the ice and fire. And as we spoke this morning, that it has been a tough time, and probably many companies have been more focused on producing papers to be compliant than really to be compliant to do the job. Because most of the AML officers in Estonia have been just 24/7, probably even, just writing answers or preparing answers. And if we have to do it next year again, to start from the scratch, applying the new license, which actually doesn't give much any new rights for the applicant. So I see that if we could have our smart Estonian innovation-driven mind and give, for example, together with this new license, ability to be connected to SEPA payments without commercial banks, which don't want to have any business with us, then I think everybody would sign with both hands, yes, we're ready. But if we are just having the same license, we have to provide the same amount of papers, which is costly. Even if you have your own lawyers, whatever you have, this is a cost, and human power is a lot what must be spent. Then for a cash perspective, this is exhausting. And we are speaking now only about MiCA. What is MiCA? After MiCA is coming DAC 8 for reporting duties, which we have been already touching today, and we see that actually this immense amount of information about companies supposed to produce. This is, yeah, we need trains over there to deliver information to FIU, or maybe FSA then. And I think that we, in a situation when Estonia has tried to reduce cost of government, actually we need one extra ministry to start to work with this information, what they are collecting, because to get usable information from this data is, I don't know how. I think as this is just in a process of negotiation about the DAC 8, let's see what's going to happen. But we are able to get much better quality AML procedures held and really followed if companies are free to do the business, to do the job, instead of trying to be compliant. So there are the two things, trying to be compliant on paper or doing the compliance so that company, that AML risks are really diminished. Because at the moment, I think that in many cases, maybe if there are some money launderers, they understand that actually not FIU is able to check any actual transactions. And probably nobody in the companies are able to do it as well. I'm independent. I am not connected to any company, so I can assume this, because this is logical. People are doing something else than they're supposed to do.
Well, indeed, being compliant on paper and indeed being compliant are very two different things. And I really liked your idea about additional benefits such as access, for example, to SEPA. It's really cool. Anyway, one of the potential outcomes of MiCA being implemented is a foreseen more close collaboration between VASPs and more traditional actors, such as, for example, payment processing companies or banks. With this in mind, would you anticipate, for example, these new partnerships between fintech or VASPs and traditional financing institutions, or maybe traditional financing institutions starting offering crypto-related services?
I can take that. Or maybe it was...
I believe, well, no, my plan was for Christoph, but let's then move to you, Alexander.
Well, thank you for the question. And I think indeed this is a very important point, because this partnership between, let's say, the traditional players and the incumbent, innovative new players is very important. And there is actually a need for integrated service offering and for having a one-stop shop. And if I may say so in a humble way, we at Mastercard, we hope to actually be able to play that role as an entry point and as a facilitator for this collaboration as part of what we like to refer as this multi-token framework through the franchise rules. So yes, I think this is needed. There is a demand for it.
So at Mastercard, you more look towards partnering with VASPs instead of launching your completely new input in the business?
Yeah, we very much, as a franchise, we like to bring the players together and facilitate cooperation rather than actually competing with our customers. Absolutely.
And Alexander, in your opinion, what types of partnerships or collaborations might emerge, or how could they impact the financial industry in general?
I think it's happening already a lot. We don't see much of it because the regulators are somehow quite silent across Europe as to the volume of interaction between licensed fintech or other financial institution and virtual asset service provider, but it's happening and it will happen even more. I remember back in 2017, where there was pretty much no regulatory requirement for virtual asset service provider. I mean, even the name virtual asset service provider was just something which was non-existent. I was working with Simplex, which was one of the first organization to enable on and off ramping at a large level for crypto companies. And I was in charge of implementing the onboarding program for crypto companies, and it was the far west. I was coming from a traditional financial institution myself, and I was like, how do I do that? There is no standard, there is no regulation. And basically, the idea was to take over what was already existing because the risks were still pretty much the same. Now there is clarity. Now we have standards, we have a regulatory framework which is clear. There is a way forward. So if you're a bank or if you're a fintech, you know what to do. You know what type of onboarding and what type of control as part of your onboarding you need to perform to onboard a fintech, a crypto, sorry. So in my opinion, this clarity will boost the interaction between traditional financial institution, fintechs, and virtual asset service provider in the very near future. It's already happening, actually.
Well, we have seen like business perspective, regulatory perspective. I would like also to bring attention of the panelists and the fellow audience to the consumers. What do you think could implementing MiCA and these new collaborations between traditional financing and FASPs lead to, I don't know, greater competition, more innovation, ultimately better financial services for the consumers? Or alternatively, with these high standards, it might lead to unintended consequences such as decrease in competition and due to increased systematic risk that you need to invest lots of resources in being compliant and adhere to the high standards instead of developing your services.
I would like to comment on that. So with this uniformity that MiCA will bring, I believe we will have a healthier competition in the market. But with that, in placing this significant burden on the smaller market players, it will be harder to enter into the market. So this may stifle the innovation and not so much of the young entrepreneurs. We will not be able to achieve the same goal as we could do at the moment because the resources will be needed, quite many of them, then all the regulatory compliance matters internally. So in a way for the consumers, it could be the case that we will see more innovative products, but from the bigger market players, I would say. Because all the small market players probably will not be able to comply fully.
Yes, with all these technical and operational challenges, I really think it's hard for small players to enter the market. So I would like to hear the comment on how you foresee they can overcome this drawback. Any ideas?
Magnus,
Magnus,
rose the
yeah,
hand.
sorry.
Yeah, no, it was just a small comment on the last part there. And I think it's down to what we foresee as products per se. Because right now in MiCA, we haven't been able to decide whether or not to include DeFi or DAOs or whatever that starts with a D, which is de facto not even decentralized. Rather also NFT part. And what I personally believe will drive innovation is the mechanisms of DeFi. That is when you can see efficiency for consumers out there also. So I think we need to also separate that one in the terms of where do we see now what I refer to as, call it MiCA 1, compared to what will come, and it will come something close to MiCA 2 or 3 or 4 or whatever we will get. So I think we need to see that one in a broader perspective, that it's a very narrow piece of the market that MiCA is currently taking care of. So I think we need to lift that perspective also compared to what type of products and apples, pears and oranges that we are talking about when it comes to sort of the benefits of this market, which is clearly there that we see, but that MiCA in this version do not necessarily cover in detail.
Indeed, well, MiFID covers security tokens, MiCA covers more traditional cryptos, and then we have DeFi, NFTs, and all these non-fungible tokens. What do you think, by the way, on them? Should we foresee the development of new pan-European regulation, or this would be handled on the national levels? At least I assume something would be in Estonia soon.
Estonia is at least usually taking the risks to approach and approach the problems. But I think why we are having such immense amount of those regulations, because we haven't mentioned yet in this panel transfer of funds regulation, and there are others that that are coming together, and everybody are trying to direct the blind man in the minefield with regulations that don't step there, don't go there. We're trying to protect customers. We're trying to protect investors. Yesterday in the dinner we discussed that actually crypto was meant to be as power over your assets, which comes with responsibility over your assets. And we can't, if people want to be stupid, then we can't take this right away from them, because being stupid is like in essence of everybody, because everybody wants to become rich in a horseback very fast. But this is not the issue. I think that we will never be able to regulate all those problems. We will never give the safe haven for stupid customers, excuse my French. And also scammers, they are always a couple of steps ahead of regulations. So I think we have to find digital means to get rid of what every regulator wants to get rid of, which is anonymity. Because anonymity is something honest people don't need. They need privacy. Today, do we have privacy? We have imagination of privacy, because we are leaving our digital clone everywhere where we are opening an account. Basically, we managed to digitalize documents. We have PDFs, fantastic. But we are using them exactly the same way like Sumerians used their clay tablets. If I have a copy, I believe that this is you. So I think we are past this stage. We have to start to rule digital world with digital tools. And I think there is a very, very long way to go, but this is what will take us out from this trench, actually where we are at the moment with oranges and pearls and everything else, because yes, we covered a little part, but there is a huge field we have to take care of. So I think this is our part. We have to have supporting services to help secure and market participants and also end users from the risks, but are there live in the market today.
Well, indeed, you have raised very interesting questions that whenever something new starts to exist, it's always there is an attempt of evil-minded people to exploit it in a bad way. And neither the representative of business nor the regulator can be as creative as criminals, because they have different purposes in their lives.
Maybe a quick comment on the paradox of over-increasing regulatory requirements. So as Raido mentioned, we have new regulation coming all the time, and we haven't even approached the new AMLD, which will include even more of crypto, and whose supervision, which is supposed to become consistent with the upcoming new AML authority at the EU level, is still not being approached for crypto. The aim of having more regulation is to bring more clarity. But at the end of the day, and I think once again here we can draw a parallel with what is happening with fintech, this might not what it achieves. And very practically, let me explain a matter of a few seconds. we see now that to obtain a license, an EMI license, again, a banking license, a specialized banking license, is becoming much more complicated than it used to be a few years ago. So basically now, typically investors that will be likely to try to obtain a license on their own will turn to license service provider to offer license service to their clients. So that's the banking as a service, as we call it. Now, indeed, it makes sense. It's so complicated to obtain a license that you turn to the one that have the level of expertise, knowledge, but also the staff and the tools to provide license services. And we will see crypto as a service emerging. We will see consolidation of a small actor into much bigger one, which at the end of the day are not easier to regulate at all. If you see the mass banking as a service is becoming in Europe, you see Solaris Bank, you can look at Lithuania as well, what has been happening recently. The regulators are just starting to understand the complexity of banking as a service. So it's basically, if you're in AML CFT for quite a long time, what has been happening with correspondent banking all over. And this is starting again. So by making the regulation more complicated, we are also creating, we're shooting ourselves in the foot because we're creating monster to regulate. And I think we should keep that in mind as well and sometimes try to keep it simple and for the sake of good regulation as well, good supervision, sorry.
So would you anticipate any chance of maybe deregulating the sector in the upcoming years or making it more flexible?
No, we can't do it now.
Not after all the efforts.
We can't stop the snowball, which is already rolling and it's getting bigger and bigger and bigger. And we can't stop it because we have built this way. We are a lack of invisible hand who is protecting the market. So today, unless we have tools to melt the snowball, like mentioned, we have to have a universal identity for everybody without containing personal data, so zero KYC. Estonia today is building standardized mechanisms for companies having easier KYC process, the way that information is already put on the shelf, and if someone wants to KYC somebody, onboard somebody, they have way to ask, and I can give a license to ask my information. This is not the first in Estonia, but Estonia is preparing to standardize mechanism. I think information and data supposed to be standardized. Also, I think that every service is supposed to have also identification. With that, we can eliminate scammers easily, because one thing to have a license or some number on your web page that I have this license, this license, this license. The other thing is to have identity of the service. You don't have this identity, I don't trust you. This is human identity and service identity. And then, of course, even machine identity, because AI is starting to call us very soon and tell that your family is in trouble, pay us 500 euros. So we are in the brink of complete change of the world. It happened much sooner than expected, because we were already comfortable what we have today. But I'm quite sure that today regulation is the only thing keep this sinking ship above the sea level. And to make this ship like a spaceship, we have to fix it with tools we don't have and possess today, but we are capable to build.
Excellent point. And just like to give space for some kind of conclusions and sum-ups, I would like to ask more philosophical question. As we all agreed that legal certainty is definitely a must, do you think it would benefit the crypto adoption level in Estonia specifically and in the European Union in general, or for more mass crypto adoption, we should focus on enlightenment, education of consumers and other activities?
I've been spoken a lot, but I say my last couple of sentences. I think mass crypto adoption or going mainstream with crypto is not any goal we have to achieve. This is now open market with financial instruments or payment instruments, and let the market choose. This is free competition. As crypto is becoming more and more regulated, then basically everybody have possibility to choose what they want to use. And that makes even financial services cheaper if they have to compete with crypto services. So that's what I think. This is not the goal. We are not crypto is not a god for us. We are using it because crypto and blockchain have utilities anything else doesn't.
Sorry, maybe something to add. Well, actually, in Ministry of Finance, in addition of developing regulation, we are dealing also with financial education, as we see a trend that actually younger people are putting their money more and more to crypto assets instead of traditional securities or bonds or investment funds units. So in this respect, we see the need that people need to be more educated in this respect, and also state has a big part in this trying to help and providing those opportunities that people understand what are the risks if you put your money in different crypto assets. I think, yeah, it's quite important issue.
Yes, I can tell you that there is Roman from Crypto Club, and he is dealing exactly with this, educating people in crypto, and you're supposed to put your heads together.
Yeah, we'll do it.
I think Magnus wanted also to add a couple of words on the topic.
Yeah, sure, more than happy to. No, I think in terms of briefly following up on what Raido said also, that we have to see this one from a bigger perspective. As he briefly touched upon, that this ecosystem, what we refer to and just throw out now, crypto, what do we mean by crypto? Is that a staking mechanism within DeFi where I can put my NFTs as a collateral to take a loan, which is happening in practice? Is it that we're talking about? Or is it purchasing a shitcoin that we hope will go to the moon? Is that crypto? And I think we need to separate these kind of things, because right now, if you look into markets in general, and that's very interesting, not the dollar amounts per se, which is volatile and go up and down, but the number of users. And in crypto in general, when you take the whole thing as someone who has either had a virtual asset of some kind of way, a Bitcoin or NFT, whatever, that's approximately 450 million people globally. While NFT owners, that's only approximately 2.5 million unique owners of NFTs globally. And users, it's only 6.5 million accumulated, while the active monthly users of DeFi is only 500,000 people. So we have to understand and maybe use the rule of thumb. New technology takes 10, 11 years before it goes mainstream. And purchasing a Bitcoin today, I would say, is clearly mainstream. I can download the app and do this within 3 minutes in Norway. That's mainstream. But to handle a staking mechanism within DeFi, well, and then if you say DeFi came out in 2018, maybe we'll just see the real impact of DeFi first in then 28, 29 something. And we have to adopt the framework around this, because in this picture, we will also have CBDCs, the central bank digital currencies, that will use the attributes and the mechanisms of DeFi in this ecosystem. So I don't see a one-to-one here. This is something that is going to evolve over time. And trust me, the next FTX, in terms of, call it the impact surrounding it, will come from DeFi. You heard it from me, and I stand by that. That will come from DeFi, because there's so many fat fingers in the code, there's so much fraud, there's so much insider trading, all of these elements that we need to take control of, like Raido said, in terms of getting away from pseudo-anonymity and anonymity to having a control over this one. So I say we need to look into these different elements from different parts and following it. So we cannot draw up a framework where we don't have created the landscape yet. That's my take on it. So I think we need to distinguish between what we mean by crypto and find that definition to make it more clear, also for politicians, which I also said in my speech is one of the most common sort of misinterpretations around politicians. They think crypto is one thing, and it's for sure not.
Well, thank you for such an excellent summary and like key takeaways of the whole panel discussion. Would anyone else want something to add, or we can move to questions from the audience if we do have any of them? Okay.
The question is that, do you see MiCA or other regulations taking away from the core values of crypto? Any of you can respond.
Core values of Bitcoin have been out of the window for many years already.
Okay.
As in the morning we were speaking that in 2018 we were, probably it was in Web Summit, and some Argentinian guys, they had like so-called crypto exchange and they wanted off-ramping, and PixPay is offering today under the name of Swapin this service as the CoinsPaid. And they came to us and they asked, so what about KYC? I said, yes, of course you have to KYC it, because we were probably maybe the first in Estonia start to demand KYC. We lost 60% of our customers. Of course, slowly they returned, but we said, yes, you have to be. There's nothing to speak with you. Crypto is about anonymity, and unless brought on email address is not enough, we are not with you. So that philosophy has already out of the window. Today, crypto has been matured enough that now we're speaking in completely different terms. So today, MiCA is not able to take away anything what has not been taken away yet. So in my opinion, it's not a problem in this philosophy, because our mentality has been changed.
Anyone else?
I think there is something interesting to notice as well, and I think we've approached it briefly when we've mentioned the prohibition MiCA in store as to the volume of CBDC that can be exchanged. So basically, when a volume of a particular CBDC will reach a specific threshold, there should be limitation as to the issuance of this CBDC. And I think it's interesting to relate that to what happened with the Libra attempt a few years ago. And I remember speaking with several regulators, which at that time were just considering the possibility of installing CBDC in Europe and starting to draft the Euro CBDC concept. There is still a fear from regulator and policymaker across the globe that if some type of coins, including CBDC, would grow enough, this could basically put monetary policy at risk. And that's super interesting to see how was just a concept and a buzzword a few years ago can just create such a fear among nations at a global level.
All right. Thank you very much, Marlies or Magnus. Anything to add?
Yeah, I think I can add to that the part, just like Raido said, the irony of the whole thing of the premises around, not your keys, not your cryptos, etc., which lays there, etc. That's down to that the average Joe who is out there can fairly easy today go in and purchase some type of crypto that they hope will go to the moon. But to use advanced DeFi mechanisms or whatever, forget it, because the degens that is using that themselves doesn't even know themselves how to do it. We hear almost every week someone who messes this one up and loses millions, literally, in value. So the ironic part is that we need a trusted third-party intermediary to be there to support the average Joe, the taxi driver, your grandma, whatnot, who is not interested to remember 12 seed words in the right order or to ensure that they have a hexadecimal code that they have to store at a certain safe place. Otherwise, all their values is gone. That's why we need parties like Mastercard in there to ensure this one, to have insurance, to ensure that it's user-friendly, and that part. So I think we will see that coming more in place, ironically. So just like Raido said, this principles has been left a long time ago. And our experience from working with the industry is also that the players who is in there is adapting to it. So for example, we are assisting a couple of guys who is building a DEX, a decentralized exchange. And as a start, their users weren't mature enough to say, you have to do KYC or have a KYT on all your transactions. But now, of course, they didn't have any other choice. If they wanted to have a bank account, they had to use tools like Chainalysis to cluster the transactions and to be able to stop transactions before they happen. So we will see that coming more and more in place over the years. And I think that tax authorities are the ones that is going to drive this one, in terms of that if you are a professional investor and you purchase whatever crypto product it is, and you are depending on an accountant, your accountant will look into that one and say, hey, do this guy pay their taxes? If not, I cannot confirm it. It's illegal for you. You cannot have it. And hence, then you force the whole industry to become compliant. And I think that is the shift we will see that will come into place. We will have a small gray market that will operate and do whatever they would like to, just as in the ordinary world. While on the other side, it will be more compliance coming in on all sorts of matters.
Okay, thank you very much, Magnus. Marilise?
Unfortunately, I couldn't hear what Magnus said online, so I just hope I'm not repeating. I think Raido's point is very valid here. When we're talking about MiCA, we are talking about centralized financial service providers, and that's not where crypto started. But I don't think that this is bad. To be honest, I personally think that to a certain extent, we are likely to see some merging between the so-called traditional financial services and services falling under the scope of MiCA. So that this distinction between non-cryptos and cryptos will start fading in this sense as well. For instance, there is the TLT pilot regime, where market infrastructures related to trading of financial instruments based on TLT can be tested. Or why not the digital euro, where there will likely be a decision on whether to start issuing it later this year. So I think it's a nice approach there, that we stop imagining crypto or crypto asset service providers as something out of the financial system. And I think it is helpful for everyone to understand that it is just new technology that is really starting to compete with traditional players on the same grounds.
Thank you very much, Marilise. I'm going to hand over to you so you can wrap it up.
Well, actually, I believe we just wrapped it up with these nice questions and sum-ups.
Okay.
So thank you very much for your contribution to the panel, and it was a great pleasure to have all of you today here with us.
Thank you.
Thanks.
I'll say thank you once again. Thank you to CoinsPaid for making this event possible and for consistently demonstrating their dedication towards making the crypto industry better day by day. A round of applause for CoinsPaid. And that's how we wrap up this conference, MiCA entering into force. My name is Solace-Rose Quartey. Thank you very much for joining us for this event. For those of you who are online, thank you very much for making the time. I hope that you enjoyed yourselves and at least have been able to pick some nuggets of wisdom from all the participants and all the presentations here today. One huge round of applause to all our presenters for this conference. And as we wrap it up, if you registered for the dinner, it starts around 1800 hours or 6 p.m. And so you will be able to join. When you go towards this area, it's after that nice mustard couch. So there's an entrance that's a nice, and it's really set up so we can start with some drinks and the oyster bar. There will also be an NFT exhibition that was curated by Tarmo Kupena of CoinsPaid. And that's pretty much it. Thank you very much for joining us. Good evening.